Hello. Yes. Yes, sir. Very, very good morning, everyone. Good morning, everyone. How are you all? Everyone fine? First, let me know, is the voice audible or not? Great, great, great. I'm very much happy that everyone is starting with not good morning. They are starting with I am best, I am chartered accountant, I will definitely become CA. Very good, excellent. Bharat Chandra, I'm happy with you. Can I say everyone should write down this as a first message? Nico, everyone write down. Everyone, I am waiting for everyone message. I want everyone to write down this particular message. Till you write down, I will not start. Start writing. No good morning. Write down that I am best. I am chartered accountant and I will definitely become CA. I'm waiting. Till you write down, I will not start. Everyone who is right now available or whenever they are available, whenever they are listening the classes, the live class is not there. If there is a recorded class, write down in the comment box that of course you are the best. You are chartered accountant. Means you write down I am the best. I am the chartered accountant and I will definitely become CA. Start the day with this particular sentence only. Divya, yes, you are the best. Krishna Murthy, you are the best. Bharachandra, you are the best. Then what? Paranitharan, you are the best. Yes. Praveen, you are the best. Khushbu, you are the best. Vijaya, you are the best. And you all will become CA. Definitely. Krishnan, you are the best. Parsini, you are the best. Gokula, you are the best. Ganesh, you are the best. Balaji, you are the best. Bhuvanesh, you are the best. Very good. Excellent. Those who are writing, they are committed to become CA. It is 100% sure. And you will definitely become CA. It is my words. It is my words that you all will become CA. Can we start? Rajesh, Raju, you are the best. Jitendra, you are the best. Ravindan, you are the best. You all will become CA. Good. I am very much happy. Hare Darshan, you are the best. So I am chartered accountant. Great, great, great. Okay. So with today we'll start with consolidated financial statement and also we'll take business combination. When I say consolidated financial statement, so particularly there are three Ind AS which we need to look into, that is Ind AS 110, then Ind AS 28 and Ind AS 111. Ind AS 111 means joint arrangement. And business combination will take Ind AS 103. We start with consolidation and then we'll take some break. After that we'll do business combination also. Okay, sir? Yes, sir. Sekhar, you are the best. Okay, chalo. Can we start? Now, for consolidated financial statement, just try to understand when I am saying Ind AS 110, so of course, can I say they will ask a question of consolidated balance sheet? For that, requires some steps to be followed. So I will not go into the concept because you know a concept about consolidation. I'm not going into that part. Correct? So we'll come with the steps. Let us revise first all the steps which need to be taken care whenever a question of consolidation will come regarding consolidation with subsidiary company. Correct? Can we start a revision? So when I say this summary note is already given in the Telegram channel, you can just download it and you can start reading from there. Okay, got this point? Or if you don't want to right now download, don't download, just listen whatever I am saying. Correct? Whenever there is a consolidated financial statement, there are three topics. One is related to subsidiary. Whenever it is related to subsidiary, we apply Ind AS 103 on the date of acquisition, and subsequently we apply Ind AS 110. Correct? Then for joint arrangement, is there is Ind AS 111, and for associate and joint venture there is Ind AS 28. First we'll concentrate related to subsidiaries. Whenever we enter subsidiary, what are the points which need to be taken care? First is basic adjustment. What are the adjustment which can be given the question? First, goodwill need to be calculated. Then we need to think about NCI measurement. NCI measurement. Then fair value adjustment of INA, means what are the fair value information of INA is given, that need to be taken care. Then abnormal item adjustment might be asked. Then dividend paid by subsidiary company can be given the question. Then bonus share declared by subsidiary company. This is a new adjustment which was asked in the last exam. We will discuss about that also. And any error given in the financial statement of both the company, parent company as well as subsidiary company. What are the adjustment required, that we need to understand. First, what are the working note required? Whenever a question of consolidation given, the following working note is required. First working note is about the fair value adjustment of INA. Fair value adjustment of INA. First you start always with the fair value adjustment of INA. Then we'll prepare analysis of profit of subsidiary company. What we'll do? Analysis of profit of subsidiary company. Then we'll prepare statement of net asset of subsidiary company, statement of net asset of subsidiary company. Then we'll do calculation of goodwill or gain on bargain purchase. This is step number 4. Step number 4. Then step number 5. If suppose they ask you to calculate impairment loss on goodwill, then we'll prepare one working note for calculation of impairment loss of goodwill. However, normally impairment loss of goodwill is given the question, but in one of the question they have asked calculate impairment loss. So that impairment loss is calculated as per the requirement of Ind AS 36. Correct? Then if there is a step acquisition, then we do also calculate remeasurement gain or loss of previously held equity interest. I hope you know about step acquisition. Whenever we do multiple acquisition and at one point of time we obtain control, so that is known as step acquisition. In case of step acquisition, Ind AS 103 says that previously held equity interest will be remeasured. So we need to find out gain or loss on remeasurement. Correct? Then we'll need to also think about unrealized profit on unsold stock or asset. So we need to eliminate unrealized profit. That how to eliminate that we need to understand. Then we need to then calculate the balance of other equity and NCI as on the date of consolidation. How to calculate balance of other equity NCI, that will be the next step, and the last step will be the cancellation of intercompany balance. If there is some intercompany balance given, of course we need to cancel it. So how to cancel that we need to understand. The first working note is about fair value of adjustment, fair value adjustment INA. So first find out what are the information about INA. INA means identifiable net asset. So they will give you fair value information about that INA. So normally if the fair value information is not given, then we'll assume that fair value is equal to carrying amount. Then we'll assume that fair value is equal to what? Carrying amount. Got this point? One adjustment. Have you understood? Correct. So normally in exam, whatever I have seen, they give fair value information about PP. Normally they give P, property, plant and equipment. Normally they will give what? Property, plant and equipment. Normally they will give property, plant and equipment. They may also give inventory, trade receivable, trade payable. Normally they give fair value information about only PP, but they may also give fair value information about inventory and other asset as well as liability also. They may give information about inventory, trade receivable, trade payable and provision. Understood? So first we need to find out fair value of that asset and liability on the date of acquisition. On the date of acquisition, compare with the carrying amount of that asset and liability on the date of acquisition. Normally this carrying amount of the assets and liability on the date of acquisition will be given. Now any increase in the asset will be fair value gain, any decrease in the asset will be fair value loss. Similarly, any increase in the liability will be what? Fair value loss. Increase in the liability will be fair value loss, and decrease in the liability will be fair value gain. So you need to calculate fair value gain and loss on the date of acquisition. This you have understood. Whatever I am saying, if you have understood, just write down yes sir, yes sir. Up to this any doubt? Up to this any doubt? One by one, just write down. If you have understood, just write down yes sir, then I will proceed. So fair value gain and loss you have understood. Follow. Yes, sir. Now, sometime what happen in the question, they will give you changes in fair value, changes in the value of the asset on the date of acquisition. So, suppose they have given changes in the fair value, means increase or decrease. So, be careful. It means they have given this information only. They have given this information only, then you don't require this information to find out changes in the fair value on the date of acquisition. Be careful, read the question carefully. Sometimes they give changes in the fair value on the date of acquisition. In that case, they have given directly the information about fair value gain and loss. Suppose they have given changes in the positive. If they have given changes in the positive, it means it is increase. Changes in the negative means what? Decrease. So if they have given positive information about changes, it means it is increase in asset or liability. If they have given negative, it means this is decrease in asset or liability. So increase in asset will be what? Gain. Increase in liability will be loss. Decrease in asset will be loss, and decrease in liability will be gain. So be careful about that also. Have you understood this point? Follow. Have you understood this point? So this is fair value gain or loss on the date of acquisition. Then after that, we need to do some post acquisition adjustment. Post acquisition adjustment means if suppose there is a property, plant and equipment, so can you say we should think about depreciation on that fair value adjustment for the post acquisition period. Depreciation on the post acquisition period. So it means we need to find out post acquisition adjustment, means we should deduct any additional expense or we should add any additional income. So if there is any additional expense, deducting, if there is some additional income, then you should add it. Understood whatever I am saying? So additional expense, yeah, additional income, there can be additional expense or additional income. For property, plant and equipment, can I say if there is a fair value gain, means there is an increase in the value, so it means we need to calculate additional depreciation. And if there is a decrease in the asset, then it means we need to calculate some saving in depreciation. That will be as per the information given the question. So it means just try to understand for this post acquisition period depreciation adjustment, how to calculate that we need to understand. Now if the remaining useful life is given, then always apply SLM. So how to calculate additional depreciation or saving in depreciation? You will do fair value gain or loss divided by remaining useful life multiplied by post acquisition period. So post acquisition period can be for 1 year, 2 year, that you need to be careful. So similarly you need to do this adjustment for how many year? For the post acquisition period. So fair value gain or loss divided by remaining useful life multiplied by post acquisition period. Understood? So if remaining useful life is given, always apply SLM. But sometimes rate of depreciation is given. Now rate of depreciation is given, so that rate can be based on SLM, the rate can be based on RBM. If the rate of depreciation is given based on SLM, then how to calculate additional depreciation or saving in depreciation? You will do fair value gain and loss multiply by rate of depreciation, fair value gain and loss multiply by rate of depreciation into post acquisition period divide by 12 Understood? So on fair value gain or loss you need to apply rate of depreciation. But if RBM is given, rate of depreciation is based on RBM, then don't do in this way. Then you need to calculate additional depreciation or saving in depreciation by comparing fair value. First you will find out fair value on the date of acquisition minus what? Carrying amount, minus carrying amount, but that carrying amount will be opening balance of that period. So fair value minus opening balance, be careful, fair value minus opening balance of that particular year, not carrying amount on the date of acquisition. Fair value minus opening balance into rate of depreciation into post acquisition period divide by 12. Normally student do mistake यहाँ पर, यहाँ पर. Understood? I hope you have understood this point. Fair value minus opening balance into rate of depreciation into post acquisition period divide by 12. Understood this point? Correct. Now, if the rate of depreciation is given, but question is silent about SLM or RBM, then what you will use, SLM or RBM? Just for me, if the rate of depreciation is given, but suppose they have not given SLM or RBM, so you will use SLM or RBM. Everyone respond fast. You will use SLM or RBM? RBM, very good. So if the rate of depreciation is given and question is silent, always use RBM. Don't use SLM. If you are using SLM, then they will not give marks. So RBM means what? Fair value. Compare with the opening balance, then multiply by rate of depreciation, and then post acquisition period divided by 12. Understood? However, if nothing is given, suppose rate of depreciation not given, then ignore depreciation adjustment. Then we'll ignore depreciation adjustment. Understood? Depreciation adjustment, have you understood? Follow. Yes sir, no sir? Fast. Have you understood depreciation adjustment? Everyone fast. Have you understood depreciation adjustment? If you are saying no sir, then once again I will repeat. Yes sir, understood. Now coming to other assets and liability. So for other assets and liability, of course we need to do post acquisition adjustment depending upon the information is given in the question. There is inventory, and suppose that inventory which was acquired on the date of acquisition by parent company has been sold, then this will be considered यहाँ पर in post acquisition adjustment. Suppose this was 1000 and 50% has been sold, so you will do -50%, and the 50% will be unsold यहाँ पर. I hope you have understood. So if the inventory has been sold, so that will increase the cost of sales during the post acquisition period. So if they will increase the cost of sales, means decrease the profit during post acquisition period, so therefore we'll do minus here by minus. So if this inventory has been sold during post acquisition period, then we'll do minus, and the remaining will come as unsold. Correct? Similarly, if the trade receivable whatever you have acquired on the date of acquisition has been collected during the post acquisition period, so you'll do minus if collected, and whatever uncollected remain in the date of consolidation. Chalega? And if there is a trade payable which has been paid during the post acquisition period, so you will do minus paid during post acquisition period, and whatever not paid will come on the date of consolidation. Similarly, any provision is given and the provision is settled during post acquisition period, then you will do minus from yahan par, and then this will be unsettled provision. Understood? It means for inventory, sold will come in post acquisition period, unsold will come on the date of consolidation. For trade receivable, so it will be, if received, it will come as a post acquisition adjustment. If not received, then it will be on the date of consolidation, remain outstanding on the date of consolidation. If trade payable paid, then it will be adjusted during post acquisition period, and the unpaid will be outstanding on the date of consolidation. Provision, if it is settled, it will be adjusted during post acquisition period, and if not settled, means it will remain outstanding, then it will remain outstanding on the date of consolidation. Have you understood this particular point? I will also show you from one question also, but have you understood? Yes sir, respond fast. Have you understood this particular point? बोलिए. Need an example? I will take a question on this, but have you understood or not? I will take one example, then only you will be able to understand. I will take one question. Now, there are some general assumption. The question is silent about inventory, then always assume that it is unsold during the post acquisition period. For if the question is silent about trade receivable or any other receivable, then always assume that it remain uncollected during post acquisition period. If the question is silent about trade payable, then always assume that it remain unsettled during the post acquisition period. These are general assumptions. This you can't change. This become a particular question. Got this point? Have you understood? Any doubt? No doubt? Doubt. If you want one example, so I'm just explaining one example. Suppose there is one inventory, and the fair value was on the date of acquisition 10,000 and carrying amount was 8,000. So how much increase? 2,000. And during post acquisition period, if it is sold, suppose 50% sold, 1,000 will minus and 1,000 will remain in the balance sheet, in the consolidated balance sheet. That's 1,000 will remain in the balance sheet. This is the particular point. I hope you have understood. Better discussion will take from one question. Got this point? Yes, sir. Now next working note will be analysis of profit of subsidiary company. So we need to analyze the profit of subsidiary company, analyze the profit of subsidiary company. In this, normally they give retained earning and general reserve. Normally they provide information about retained earning and general reserve. Understood? Till now they have not given any OCI component of subsidiary company, but suppose they have given any OCI component of subsidiary company, that will also come here. For example, OCI component, let's see, they have given revaluation surplus of subsidiary company, so you need to also take that into consideration. Suppose they have given, till now they have not given in any exam, but it may be asked in your exam. Understood? So retained earning, general reserve, I have also taken OCI to explain you this point. So first you write on closing balance, then you write on opening balance. Closing balance minus opening balance, this will be profit after appropriation. So closing balance minus opening balance will calculate profit after appropriation. Profit after appropriation. Understood? Profit, so this become profit after appropriation. Now if suppose any error has been given in the books of account of subsidiary company, so that error need to be rectified and we need to find out the correct profit, so we'll do adjustment of any error. Till now error question has been given only in one particular question, but that too in the books of parent company. They have till now not given any error in the books of subsidiary company, but they may give any error in the books of subsidiary company also. So this profit need to be corrected, so we'll do plus minus rectification of error depending upon the information given in the question. Means if we rectify the error, so either it will increase profit or decrease profit as per the information given the question, that you do rectification. Normally this rectification is done in retained earning. Normally the error will be given for retained earning, so you will do rectification only in retained earning. Normally I am saying, correct? Then if any abnormal loss is given, so we'll add abnormal loss to retained earning to find out profit before abnormal loss. So first we'll find out profit before abnormal loss. So any abnormal loss will be added, any abnormal loss will be added, any abnormal loss will be added. Till now no question of abnormal loss has been given in the ICS study material, but if given plus abnormal loss, do it. Plus abnormal loss, do it. Then any dividend paid by subsidiary company, whether it is dividend paid is final dividend or interim dividend, any dividend paid during the year, will be added. So final dividend add karo, interim dividend add karo. Understood? In retained earning, so we'll calculate profit. We want to calculate profit before dividend. Understood? Correct? Then any bonus shares. Now bonus share declared by a subsidiary company, there can be two type of question. Now what is the journal entry of bonus share? Bonus share journal entry you have done in CA Inter. Journal entry is reserve and surplus, account debit to equity share capital. Is whenever you declare bonus share, so you pass journal entry reserve and surplus, account debit to equity share capital, means your reserve and surplus will decrease and your equity share capital will increase. So can I say normally we debit reserve and surplus, so if you have already done journal entry, so your reserve and surplus has been decreased. Now which reserve and surplus, that will be given in the question. If this bonus shares has been declared from retained earning or general reserve or any other reserve, whatever has been given, if the journal entry has been done, if recorded, so you add to that particular reserve and surplus, normally in exam they will give from general reserve, so we'll add to the general reserve, we'll add bonus share declared to the general reserve to nullify the effect of bonus share, so what we'll do, add back to find out profit before appropriation. Correct? Understood this point? Correct. But if suppose bonus year journal entry has not been done, if the bonus year journal entry has not been done, suppose no journal entry or bonus year has been done, then can I say there is no need to add back? Then don't do any effect in analysis of profit. So if no journal entry has been done, you can see we'll ignore totally from analysis of profit, because journal entry has been not done. So the question of nullifying that will not arise. Understood? So if the journal entry has been done, what you'll do, you'll add back to that particular reserve and surplus. If the journal entry has not been done, then do not do anything in an analysis of profit. Ignore that transaction entirely, ignore that adjustment entirely from analysis of profit. Then this will become profit earned by subsidiary company, profit earned by subsidiary company. Correct. But before abnormal loss, this is profit earned by subsidiary company, but before abnormal loss. So can this become profit earned by subsidiary company before abnormal loss? Understood? Now this will be allocated to pre-acquisition period and post-acquisition period. Suppose this is the current year, and this is the beginning 1/4, and the date of acquisition is this, and this is the 31st March. So this become pre-acquisition period, this become post-acquisition period. So suppose 3 months is pre-acquisition period and 9 months is post-acquisition period. So this profit will be allocated to pre-acquisition period and post-acquisition period depending upon a time ratio. So we'll do 3/12, 9/12 as per our example. So can you see, you can easily divide this profit in pre-acquisition profit and post-acquisition profit, applying the time ratio, understood? Applying the time ratio. Correct. Now whatever this profit you have allocated, okay, this is the profit before abnormal loss, but actually we want profit after abnormal loss. So just find out abnormal loss has happened during pre-period or post-period. If it has happened during pre-period, then deduct abnormal loss from pre-acquisition profit. But if that abnormal loss has happened during post-acquisition period, then deduct abnormal loss from post-acquisition period is as per the date of occurrence. So suppose if the abnormal loss has happened during this period, then deduct from pre-acquisition period. If the abnormal loss has happened during this period, then deduct from post-acquisition period. This much you understood? Have you understood this much? बताओ. One doubt come about error को छोड़ के, apart from error any doubt? Apart from error any doubt? Got this point? Apart from error any doubt? If you have understood, write down yes sir, yes sir, yes, so that I can proceed. Everyone should write down yes sir, yes sir, so that I can proceed. Yes, you can do Sona and AOP together also. You can do it. Nothing to worry. Correct? I have done AOP in this way because now they started giving bonus here, etc. So I am using this analysis of profit statement. Understood? Abnormal gain, normally they will not ask in exam, they will give abnormal loss only, because there is no concept of abnormal gain. Correct? Now are you getting what I am saying? So normally they will ask you abnormal loss only. Abnormal gain also they may ask. So if suppose there is abnormal gain, so do minus abnormal gain, then यहाँ पर do minus abnormal gain and then add back in the period, add back to pre-acquisition period or post-acquisition period as per the date of occurrence. But normally I have seen ICI, if they will ask abnormal loss, they will not ask abnormal gain. चलेगा? Understood? Now coming to error, suppose it is given one error. Suppose it has been given the question that I'm just asking one example. The purchase of property, plant and equipment has been recorded in PL account. It has been recorded as purchase. This is one very general rectification. Correct? So what you will do, you will increase your PP and you will decrease your you'll increase your property, plant and equipment, and you will decrease your purchase. Means you will decrease your expense, your profit will increase. So the next effect will be retained earning. Means due to that rectification, your retained earning need to be increased, and your PP will also increase. Your property, plant and equipment will also increase. Correct. Now this effect need to be given in consolidated balance sheet, and this effect will be given in analysis of profit. Understood this point? One example I have given, but I have seen that they don't ask rectification in the books of subsidiary company. Till now, they have not asked. But if they ask, you need to be careful. Understood? Correct. Now coming to OCI component, just try to understand. OCI component you cannot allocate in time ratio, because can I say any revaluation gain or any other OCI gain or loss will happen at a particular point of time. Normally, can I say the OCI gain or loss will arise as on 31st March. Normally it will arise as on 31st March, but revaluation can be done at any point of time. Suppose revaluation has been done during pre-acquisition period. So can I say that revaluation gain will be allocated to pre-period, not to post-period. Means can I say this OCI gain and loss, will not be allocated in time ratio. It can be either pre or it can be either post. But if the question is silent, always assume it is post. Are you able to understand? So if they have given some OCI component, whether it is exchange gain or loss, or whether it is revaluation gain or loss, or whether it is remeasurement gain or loss as per Ind AS 19, correct? Now it will be either pre or post as per the information given the question. But if no information has been given, always assume what? Post. Always assume post. Understood? Got this point? Correct? ना समझ में आया? Now there is one general assumption. Suppose they have not given opening balance. Suppose they have not given opening balance of retained earning. So always assume opening balance of retained earning is nil. You can't assume any other point. So suppose they have not given opening balance of retained earning. What assumption you will take? It is nil. But suppose they have not given opening balance of any other equity apart from retained earning. Suppose they have not given opening balance of retained general reserve or any other reserve and surplus, then always assume that it is equal to closing balance. This is general assumption, you can't change it. So what is the general assumption here? If question is silent, assume nil for retained earning. If the question is silent, assume opening balance and closing balance are same for other equity. Understood? This much you understood? Correct? Hello. Yes sir, no sir? Yes sir, no sir? The next point, next working note is what we'll do. Working note number 3, statement of net asset. This is very important working note. Your entire other working note depends upon SONA, statement of net asset. So we'll divide this statement into 3 parts. First, date of acquisition, then post period, and date of consolidation. So can you say date of acquisition plus minus post acquisition will be equal to date of consolidation. So this is plus, this is equal to, this date of consolidation will be the sum total of date of acquisition and post acquisition period. The post acquisition period will be divided into sub part based on the information of reserve and surplus given. Suppose in my question, in my explanation, I have given retained earning, general reserve and OCI. So we'll divide this into retained earning, general reserve and OCI. Retained earning, general reserve and OCI. Understood? Correct. Now we write down equity share capital. First we write down equity share capital. So why we are calculating net asset based on equity approach? Because normally they will not provide the information about net asset on the date of acquisition. They will not give you asset liability on the date of acquisition. So we use equity approach to find out net asset on the date of acquisition. We'll start with equity share capital. So whatever closing balance is given, we'll assume closing balance and opening balance are same for equity share capital. We'll assume closing balance. So closing balance will be given in the balance sheet of subsidiary company. That will become the opening balance of means opening balance on the date of acquisition. Correct? Means no difference will come here. Now retained earning on the date of acquisition, can I see it will be opening balance plus pre-acquisition profit? So this will be opening balance from plus pre-acquisition profit, and this will take from analysis of profit. Analysis of profit means what we'll take? We'll go here and we write down this opening balance plus this pre-acquisition profit will come on the date of acquisition. In the post-acquisition column, this amount will come. In the post-acquisition column, this amount will come. Understood? Similarly, same thing will do for general reserve and OCI. So in general reserve, on the date of acquisition, write down opening balance plus pre-acquisition profit. And in the post-acquisition column, we write down post-acquisition profit. Similarly, OCI, we write down opening balance and pre-acquisition profit on the date of acquisition, and post-acquisition profit, whatever is calculated as per AOP, we write on post-acquisition column. This much you understood? देखो, I have already said normally OCI gain or loss is calculated on 31st March. Normally it is calculated on 31st March, correct now? So if it is calculated year end, can I say it will be always post acquisition period? I said these are general assumptions. Don't ask me right now why. Don't ask me right now why. If you are asking why, then तो I need to do detail explanation ना, correct ना? तो write down understood कि अगर question is silent, we'll assume this only. Don't ask me why for assumption. Correct now. The question is silent, always will assume that OCI component belong to post acquisition period. Understood? OCI component belong to post acquisition period. Sir, if question give balance as on the date of acquisition or reserve, how to put this amount format, sir, and preceding for what you are asking? I have not understood. Rishi, I have not understood your question. Have you understood this? Achha, you are saying if they have given reserve and surplus on the date of acquisition only. They are given reserve and surplus on the date of acquisition, then analysis of profit is not required only. Because analysis of profit is required only to find out pre and post acquisition profit. If they have given reserve and surplus on the date of acquisition, Jindabad, then directly start statement of net asset, because they have already given reserve and surplus on the date of acquisition. Write down that reserve and surplus on the date of acquisition only. Understood now? So we can analysis profit is required because they don't give you reserve and surplus on the date of acquisition. The objective is to find out pre-acquisition profit and post-acquisition profit, because normally they don't give you reserve and surplus on the date of acquisition. Understood now? Have you understood? Just try to understand. Like, ask this much question, I will die. I will die. This is opening balance. This is the date of acquisition. This is closing balance. Now, if this is opening balance given, so we need to find out ki out of this profit, how much is pre, how much is post, correct? And this to become profit on the date of acquisition, correct? Now, if they have already given reserve and surplus, they have already given reserve and surplus on the date of acquisition, then analysis of profit is not required only. Directly write down this reserve and surplus on the date of acquisition only. Got this point? Got this point? Yes, sir. Hello. Understood? This much understood? Now, after this much have you understood? And after this, make a total of all the equity. Total of all the equity on the date of acquisition and total of equity on the post as well as on the date of consolidation. After doing total, first do minus dividend paid. Minus dividend paid. Now just see, dividend has been paid after acquisition of shares or before acquisition of shares. Is after date of acquisition or before date of acquisition. So can I say if the payment has been done before the date of acquisition, it will affect the net asset on the date of acquisition. So if the payment of dividend has been done before date of acquisition, then deduct from here, then deduct from here. Understood? And if the payment has been done after the date of acquisition, then deduct dividend from post acquisition profit. Post acquisition profit. Understood this point? Correct? So dividend paid, it can be final dividend, it can be interim dividend. Just see what is the date of payment. If the payment has been done before the date of acquisition, deduct from this. If the payment has been done after the date of acquisition, then deduct from this. Have you understood this point? Correct? If the question is silent about date of payment, always assume that dividend has been declared and paid after acquisition of shares. If the question is silent, always assume after the date of acquisition. Got this point? Correct? Now, after this, we'll find out this become the net asset after dividend. This become net asset after dividend. To deduct dividend, find out the total. This become the net asset after dividend. Then we'll apply fair value adjustment. Up to this, any doubt? Up to this, any doubt? Follow? Is whatever I am discussing, this is the summary of all the questions given in ICS study matter. If you have understood this much, you can attempt any question of ICS study matter here and any new question also. got this point? To try to understand each and everything. So with this statement, I am explaining everything. Whatever can be asked in this chapter is now explained by me from this format only. Have you understood this? Respond fast. Then we'll do plus minus fair value adjustment as per working note number 1. Whatever we have done fair value adjustment in working note number 1, that you'll do. So can I say we write down PP, whatever fair value based information, PP, inventory, trade receivable, trade payable, etc. Whatever is given in the working note number 1. Now if there is a fair value gain, we write down plus यहाँ पर. And can is a post acquisition adjustment means additional depreciation will be minus from post acquisition profit, and this will be equal to this amount plus this will be equal to this. Correct now? Means this amount to you can calculate, this will be the net amount, this will be the net amount. Understood? Now if there is a fair value loss, so this will be minus, because fair value loss will decrease the net asset on date of acquisition, and this will result in some saving in depreciation. Saving in depreciation will increase the profit of post acquisition profit. So here you will do plus. So what is the rule? If this is plus, this will be always minus. If this is minus, this will be always plus. Rule is this. Rule समझो. करेक्ट, दोनों को प्लस मत कर देना, दोनों को माइनस मत कर देना. अंडरस्टूड? यस सर. तो इफ दिस इज प्लस, ऑलवेज दिस इज माइनस, एंड इफ दिस इज माइनस, दिस इज प्लस. Similarly for inventory, if there is a fair value gain, write down plus, and if it is sold then minus, so automatically unsold will come यहाँ पर. And if it is fair value loss, so minus. If it is sold then do plus यहाँ पर. If sold then plus यहाँ पर. Automatically the net amount will be unsold. Net amount will be unsold. Correct? Once again, if this is plus, this is minus. If this is minus, this is plus. Trade receivable, fair value gain plus, fair value gain plus. If it is collected then minus. Correct? And this will be uncollected, this will be uncollected. Similarly, fair value loss will be minus on the date of acquisition. If it is collected then plus. If it is collected then plus, and the net amount will be uncollected. Net amount will be uncollected. Similarly, trade payable, if it is a fair value gain, fair value gain means plus. Fair value gain means decrease in trade payable. Fair value gain means decrease in trade payable. यहाँ याद रखना. Trade receivable, fair value gain means increase in trade receivable. Asset means asset, fair value gain means increase. Liability, fair value gain means decrease. Correct? So fair value gain will plus, and if it is paid then minus यहाँ पर. Automatically the net amount will be unpaid. Correct? And fair value loss means minus. If it is paid then plus कर देना, and the net amount will be unsettled. This is the entire fair value adjustment in Sona. Means, can I say, just try to understand. Just try to understand. In the post acquisition period for PP, this is depreciation. Depreciation. So this closing balance will be written down value. Written down value which will come in the balance sheet. Which will come in the balance sheet. Correct. This will be sold for inventory. So this will be unsold. It will come in the balance sheet. This is received. Already received. So received. So this will be not received, means uncollected. So this amount will come in the balance sheet. This amount will come in the balance sheet. This is paid. This is paid. So this for trade payable, this is paid. So this will be unpaid. So this amount will come in the balance sheet. Understood? Any doubt? Up to this, any doubt? Have you understood this? Everyone respond. Everyone respond. Have you understood this? Respond karo yaar. Fast. Everyone respond fast. Yes sir, no sir, yes sir, no sir. Fast करते जाओ. तो I will not see you. I will just speak. Yes sir, understood. Very good, very good. Excellent, 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 excellent. Now one special adjustment after this. After this, just find out the total, and then we'll do deferred tax adjustment if the rate of tax is given. Now in one of the questions they have also asked deferred tax adjustment. Now deferred tax adjustment is normally done as per Ind AS 12. First I will just give a revision of Ind AS 12. What Ind AS 12 says that, whenever there is a business combination, then we compare fair value of INA on the date of acquisition with the tax base of INA on the date of acquisition. It means you need to compare fair value of INA on the date of acquisition with the tax base of INA on the date of acquisition. Tax base of INA on the date of acquisition. Correct now. So normally tax base will be the tax base of acquiry, tax base of subsidiary company. So tax base will be the tax base of acquiry, but whenever tax base of acquiry is not given, means subsidiary company is not given, then we'll assume that it is equal to carrying amount. So for this type of chapter, normally tax base will not be given, or it will be given the question that tax base is equal to carrying amount. So can you say this tax base will be equal to carrying amount? Then this difference will be, and this fair value, if you compare fair value with carrying amount of date of acquisition, so this is nothing but fair value gain or loss. So fair value gain or loss will become the temporary difference. The fair value gain or loss will automatically become the temporary difference. Understood this point? Understood? Correct. The time adjustment already we have done in AOP. Because you are using my you are very, you are using that format where I don't use to AOP. So time adjustment already I have done in analysis of profit. You can see pre-acquisition profit and post-acquisition profit already has been separated in analysis of profit. Got this point? So this is nothing but time adjustment. This is nothing but time adjustment. Got this point? Have you understood? Yes, sir. Hello. Now, what I was saying that the deferred tax adjustment as per Ind AS 12. So Ind AS 12 says that we need to compare fair value with the tax base of INA. Correct now. Fair value of INA with the tax base of INA. INA, if the tax base is not given, then we'll assume tax base and carrying amount are same. And normally in this type of chapter, they will not give you the tax base. Then we'll assume the tax base and carrying amount are same. So can you see if the compare fair value with the carrying amount, so the difference will be fair value gain or loss, which will become temporary difference, which will become temporary difference. Correct now. So if, can I say, if that this difference is the net fair value gain, net fair value gain, so gain will be taxable in future, so this will become taxable temporary difference. If it is the net fair value loss, so it will become deductible temporary difference, and which we need to calculate DTA. Understood? So if this difference is gain, net gain, so it will be taxable. If this is net loss, then this is what? Deductible. Means, can you say, there is no need to do this working note. Can you say, if this amount, just try to understand this amount, the total of this, just try to understand whatever I am saying, the total of this, total of this is net gain. So it become taxable temporary difference, on which you will create DTL. And the total of this is the net loss, then become deductible temporary difference, on which will create DTA. So can I say, you can easily find out what is taxable temporary difference, what is deductible temporary difference on the date of acquisition, I hope you have understood this point. Have you understood this point? Correct. So if taxable, so we'll do plus minus deferred tax adjustment. So if taxable, so we'll create DTL. So DTL will be equal to taxable temporary difference multiplied by rate of tax. If deductible, then we'll create DTA, and DTL will be deductible temporary difference multiplied by rate of tax. So can you see, if DTL, then we'll do minus यहाँ पर. If DTA, then we'll do plus यहाँ पर. Have you understood this particular point? So if DTL, then minus on the date of acquisition. If DTA, then plus on the date of acquisition. Have you understood this? Correct? Got this point? Any doubt about this? Follow. And can I say, due to this post acquisition adjustment, can I say that taxable temporary difference or deductible temporary difference will be reversed? Means if you have charged depreciation, or the inventory has been sold, or the debtor has been collected, so of course your taxable or deductible temporary difference will be reversed during post acquisition period. So now you find out the total of these, correct now, and with the total of these you will multiply by rate of tax, and that much DTL will reverse or DTA will be reversed. Correct now, because if this is plus, so this is minus. If this is plus, so this is minus. So if the net gain is coming, so now reversal will be what? Just reverse of that. Correct now. So with this amount, we'll do plus and minus. If you have created DTL, then now DTL will reverse. So DTL reversal means that will increase the post acquisition profit. If there was DTA and you reverse the DTA, so reversal of DTA means, can I say, increase in expense, and increase in expense means what? That will reduce the post acquisition profit. So this will be calculated with this amount. Correct now. So you just calculate net amount of this multiplied by rate of tax, multiplied by rate of tax. Understood this point? Have you understood this point? And this will be the closing balance of DTL or closing balance of DTA, as the case may be. As the case may be. Means suppose you created DTL 10,000, out of that 2,000 reverse. So how much will be left in the balance sheet? 8,000 will come in the balance sheet. Got this point? Any doubt? Now this will become the total INA on the date of acquisition and total INA on the date of consolidation. So this become fair value of INA on the date of acquisition. This will become fair value of INA on the date of acquisition. This will become the carrying amount of INA on the date of consolidation. And this will become post acquisition profit. Post acquisition profit. Understood? Correct. Now this post acquisition profit, can I say, will be allocated to parent company NCI as per the respective holding. So it will be allocated to parent company NCI as per the respective holding. Correct now. So this will be transferred to parent company and NCI in the working note of other equity. In the working note of other equity coming soon, that working note will do. So this will be allocated to parent company NCI as per their holding ratio. As per their holding ratio. Got this point? And can this fair value of INA on, this is the fair value of INA on the date of acquisition. So this will be used for calculation of goodwill. This will be used for the calculation of goodwill. Got this point? Got this point? Any doubt? Any doubt? Have you understood this much? No, no, no. Dividend, that can be done directly there. Vishal, you are right. You are right. Correct? You are right, Vishal, you are right. Vishal, whatever you have said, that you are right, I am coming to that point only. Correct now. But now what happened now, in the previous attempt question, they have given some dividend was paid before acquisition. So only I am just clearing that point. If they have given dividend has been paid before the date of acquisition, तो यहीं से minus करना पड़ेगा. Then dividend adjustment need to be done from this profit only, because this will become fair value of INA on the date of acquisition. Then that's whatever we have done in our class, that will be wrong. तो इसलिए मैं बता रहा हूँ, अब से ये यूज करो, डिविडेंड पेड माइनस यहाँ से, अगर दिस इज पेड बिफोर एक्विजिशन एंड इट इज पेड आफ्टर एक्विजिशन माइनस फ्रॉम यहाँ से. अंडरस्टूड? Have you understood? Yes, sir. Now, just try to understand. I'm asking one question. This is the profit. This is the profit post acquisition profit. Retained earning में जो आ रहा है. My question to you: this post acquisition profit, whatever we have calculated, this is after dividend or before dividend? This is after dividend or before dividend? Everyone answer me. This post acquisition profit, whatever we have calculated, this is after dividend or before dividend? बताओ. This one. Everyone respond. Bonus year I will come. Bonus year I am coming soon. I know bonus years I have not done. Abhi I will mix everything. Now you will die. You will die. You want to die, Gokula? Whatever I am explaining, that only you think. That only you think. Correct. What I am asking, that you answer now. This is after dividend or before dividend? बताओ. This is after dividend or before dividend? After dividend. Everyone, after dividend. So if you want profit before dividend, what you will do? If you want profit before dividend, then what you will do? But suppose I ask you to calculate profit before dividend, then what you will do? Follow. Add back dividend. So therefore I am just giving clarification. This is profit after dividend, But suppose you want profit before dividend, so you will add dividend paid after the date of acquisition. Add only those dividend which have been paid after date of acquisition. जो आपने यहाँ minus किया था, the dividend whatever you have deducted, उसको add back कर दो. Understood? Only this dividend, not this dividend. So this dividend क्या करो? Plus कर दो. So you will add back dividend paid after date of acquisition. This will become profit before dividend. Understood? Have you understood? Now Vishal, you got my answer. Vishal, you got my answer. Got this point? Yes, sir. Have you understood this point? Chalega. This is only a clarification. Only a clarification. You can ignore this in your exam. You can ignore this in your exam. Chalega? Yes, sir. Now, can you say Sona is completed? So you have understood fair value adjustment. You understood AOP. You have understood what Sona. Now, Sona में एक bonus share adjustment है. Now, just try to understand bonus share adjustment. Bonus share adjustment. Now, what is the journal entry of bonus share? Already I have given. Journal reserve. Yeah, any other reserve and surplus. Normally in exam they give general reserve, therefore I'm writing general reserve. 2. Equity share capital. Correct. Now my question to you all, when this journal entry will be done, what is the effect of the net asset? Whether net asset will increase or decrease. Is due to bonus share, the net asset will remain same or it will change. बताओ. Can you say due to bonus share, net asset will not change, will not change, that asset will not change. Now if the, just try to understand, if the bonus has been declared before acquisition, if the bonus has been declared before acquisition, so net asset on the date of acquisition will remain same. And if it is declared after acquisition, then also net asset after acquisition will remain same. So can you say this journal entry will actually not affect net asset? What is the objective of this chapter? Objective of this chapter, yeah, objective of this Sona means statement of asset, to find out net asset on the date of acquisition and the changes during post acquisition period. So my question to you all, whether this journal entry will affect net asset, will not affect. Now there can be two type of question. If no journal entry has been done, if no journal entry has been done, so thank you very much. Can you say if no journal entry has been done, ignore this adjustment entirely, because can you say if you pass journal entry, ultimately you are giving effect. So if no journal entry has been done, I will say ignore this entire adjustment from working note, ignore that adjustment entirely from working note, because this bonus here will not affect net asset on the date of acquisition, yeah, after the date of acquisition. So if no journal entry has been done, ignore that adjustment entirely from this consolidation solution. Correct. Now therefore you can see in AOP also we have not done anything. In AOP में क्या किया? AOP में what we have done? AOP में if not recorded, ignore. Not recorded, ignore. Na ignore. And in Sona also ignore. In Sona also ignore. Understood? Have you understood this much? So can you see bonus share has been given as an adjustment and is given that no journal entry has been recorded by a subsidiary company, we'll say thank you very much and ignore. In the last exam, this particular point was given. So if you have ignored that adjustment entirely from your solution, your answer was correct. Your answer was correct. Got this point? Have you understood? Follow. Have you understood this particular point? No. Why it will affect net asset on the date of consolidation? Nalayak. If you will pass this journal entry, my question just समझे नहीं. You what journal entry we are doing? One equity is decreasing and one equity is increasing. So what is the effect on net asset? Zero na. Your asset liability remains same. Your asset liability remains same. You are not changing your asset liability. One equity is decreasing, other equity is increasing. So what is the effect on net asset? Net asset remains same. Net asset remains same. So if they have given no journal entry has been recorded, so ignore it entirely. Ignore the entire adjustment from entire solution. Means do not do any adjustment. Ignore it completely. Means do as if the adjustment has not been given in the question. Understood? Have you understood? Right on everyone? Yes, sir. If you have understood. Yes, sir. Understood. But suppose journal entry has been done. So I will say reverse the journal entry. So the simple thing is that you need to reverse the journal entry. You say equity share capital account debit to journal reserve. Reverse the journal entry. Reverse the journal entry means add back to journal reserve. So already in AOP we have added back. Already in AOP we have added back. Already in AOP we have added back. Check karo. Check karo. In AOP what we have done? In AOP if the journal entry has been done, so we have added to general reserve in analysis of profit, correct? And in equity share capital means Sona. Can you say this equity share capital will be after bonus years? This equity share capital will be after bonus years. I will say make it before bonus years. Means what you'll do? Closing balance minus bonus years if recorded. Do it and write down that amount here. Write down that amount here. Suppose 1 lakh was the equity share capital and you have given 20,000 bonus shares. So closing balance become 1,20,000. Of course 1,20,000 is coming here. Per. Now write down 1,20,000 minus 20,000. So this will become 1 lakh. So this will become 1 lakh. This will also become 1 lakh. So can you say by reversing the journal entry, you have nullified the effect of bonus years. You have nullified the effect of bonus years. Once you have nullified the effect of bonus years, automatically net asset remain unchanged. Net asset remain unchanged. Understood? Have you understood this entire part? Correct? Have you understood? Now just try to understand. Parsini, initially I used to combine analysis of profit and Sona together. Correct now. Now I am doing it separate. The end result will be same. I will say if you are understanding right now this particular point, try to understand with this, because right now I can't teach you both. I can't teach you both. Correct now. Understood? Have you understood, Varsini? Correct? Have you understood? First you just answer. Have you understood bonus year adjustment? Bonus year adjustment. Once again I will repeat. Bonus years, if no journal entry has been given, ignore that adjustment completely from your solution. But if journal entry has been done, so first add back to journal reserve or any other reserve and surplus from which it was declared in AOP. Then from equity share capital closing balance, deduct the amount of bonus shares and make it as if the equity share capital is before bonus shares. Understood in Sona? So automatically you have nullified the effect of bonus shares from the entire solution. It is as simple as no journal entry has been done. It is as simple as now no journal entry has been done. Understood? Have you understood? Yes, sir. So with this Sona completed, Sona is completed. Now we'll come to calculation of goodwill or gain on bargain purchase on the date of acquisition as per Ind AS 103. This is very easy. First we'll do fair value of consideration paid. This is nothing but cost price of investment acquired on the date of acquisition. So this will be cost price of investment acquired on the date of acquisition. Correct now. So this will be given the question. Suppose you acquired 40% on the date of acquisition. The cost price of 40% investment, whatever you have acquired on the date of acquisition, and this information will be from balance sheet only. This information you will get from balance sheet. Got this point? Correct. Then you will add fair value of previously held equity interest. Suppose initially you have also acquired 40% before the date of acquisition. So this become previously held equity interest. So this will come at fair value of previously held equity interest on the date of acquisition. So how to calculate this? Number of equity shares previously acquired multiplied by fair value of equity shares of subsidiary company, that will be given in the question. So this will become fair value of previously held acquired interest. Correct now. So can you say 20% will be NCI? 20% will be NCI. Correct. Now I'm just taking one example. 20% will become NCI, 20% will become NCI. Got this point? Now NCI is measured by two methods. One is fair value method, or second is proportionate share in INA method. So if the fair value information has been given, then we'll apply fair value method. So value of NCI A. If the fair value method, so how to calculate? number of equity shares not held by parent company multiplied by fair value of shares of subsidiary company. Of course, fair value of equity shares of subsidiary company will be given the question, so you can easily find out fair value of NCI. But if the suppose fair value information is not given, or they ask you to use proportionate share in INA method, then we'll use Pasina method. Pasina method means what? Proportionate share in INA method. Then we'll find out proportionate share in fair value of INA. So we'll take fair value of INA as per the previous working note. Fair value of INA on the date of acquisition. On the date of acquisition, correct now. So fair value of INA on the date of acquisition means this amount. This amount you will take directly into what? 20% as per my example. So it will be multiplied with share of NCI. This will be the value of NCI by using Pasina method. You will make it total banao, and from this minus fair value of INA on the date of acquisition as calculated above. So minus kar do fair value of INA on the date of acquisition. This will become goodwill or gain on bargain purchase on the date of acquisition. Goodwill if the amount is positive, then goodwill. If the amount is negative, then gain on bargain purchase. Gain on bargain purchase will be transferred to capital reserve in the balance sheet. Understood? Yes, fair value of equity shares on the date of acquisition. This is the fair value of equity shares on the date of acquisition. This all are doing on the date of acquisition, because Ind AS 103 is applicable on the date of acquisition. Correct? This is also on the date of acquisition. But this point, correct? Any doubt? I think you have understood. Now you all know, I think you all know that whenever we use fair value method for measurement of NCI, we calculate full goodwill. Whenever we use proportionate share in INA method, we calculate partial goodwill. It can be full goodwill, it can be partial goodwill. Full goodwill means it is attributable both to parent company as well as NCI. Partial goodwill means it is only attributable to parent company. Got this point? Now, sometime they also give impairment loss on goodwill. So if they have given impairment loss on goodwill, they will do less impairment loss on goodwill, and this will become carrying amount of goodwill on the date of acquisition. Carrying amount of goodwill on the date of acquisition. Understood? Correct? Any doubt? So this become impairment loss if any given the question. Now sometime impairment loss they will not give you. They will ask you to calculate impairment loss. So if they ask you to calculate impairment loss goodwill, then we will apply the concept of Ind AS 36. The next working note is what? Calculation of impairment loss on goodwill. Now this is actually based on full goodwill or partial goodwill. Have you understood this much? If you have understood this much, then I will proceed to next working note. Follow. Understood. Now let us calculate impairment loss on goodwill based on if the full goodwill is here. Full goodwill is very simple. Therefore, normally they will not ask full goodwill. They will ask partial goodwill only. So if full goodwill, so write down carrying amount of the date of acquisition. Correct. Carrying amount of INA on the date of acquisition. Carrying amount of INA on the date of acquisition, not on the date of consolidation. So this figure you will take from here. So now this carrying amount of INA on the date of consolidation. So this you will take this figure. On the date of consolidation means this this amount. So normally goodwill impairment testing will be done on 31st March, means on the date of consolidation. So you will take carrying amount of INA on the date of consolidation. This amount, this you can take. Then in this add full goodwill as calculated above. So add full goodwill as calculated above. Correct. So in this add full goodwill as calculated above. So this will become total carrying amount of CGU. Means subsidiary will be considered as one CGU. Correct now. And then compare with the recoverable amount. Recoverable amount will be given the question. This become total impairment loss. The total impairment loss will first allocate goodwill to the extent of carrying amount. The first allocated goodwill, and the balance will be allocated to all other non-current assets which are covered under Ind AS 36. However, for this type of question I have seen this will be only allocated goodwill, because after that it will become nil. Means normally in this chapter this will become nil, because if this not become nil, this will become very complicated question. Understood? So I will say this impairment loss from this chapter point of view, it will be entirely allocated goodwill, because the impairment loss amount will be less than the carrying amount of goodwill. Understood? This point have you understood? So this become goodwill impairment loss. This only was the objective to find out. Now, if partial goodwill is given, so I will suggest you to use this format. Correct now. So partial goodwill, so first write down goodwill, then write down INA, then write down total. So carrying amount, this is the partial goodwill carrying amount. Then add on carrying amount of INA on the date of consolidation from Sona. This become total carrying amount. Then this is partial goodwill. What India 36 says that for impairment testing we should gross it up, means we should make it full goodwill. If this is 80%, so can you see you can find out 20% share of NCI which was unrecognized. We'll add unrecognized share of NCI. We recognize unrecognized share of NCI. For example, if this is 80,000, what you'll do? 80,000 divided by 80 into 20, so 20,000 will come. Automatically this will become full goodwill. So for impairment testing will make partial goodwill, will convert partial goodwill into full goodwill by grossing it up. Correct? And can you see now this amount, this will become the total INA, total net asset of CGU, total carrying amount of CGU, considering full goodwill. Now this will be compared with recoverable amount. So this will be the total impairment loss. This impairment loss will first allocated to what? Goodwill, to the extent of their carrying amount, and the balance will be allocated to other asset. However, from my point of view, in this chapter, this will be nil only. Correct. Now from this total impairment loss which has been allocated goodwill, correct now, can you see we should not consider NCIs here, because that was not recognized. So from this we'll do less unrecognized share of NCI. Is this multiply by 20% kar dena, so this will not be recognized, because if you have not recognized that much portion of goodwill, so you can't recognize impairment loss for that much portion. So you will deduct this much, and this will be impairment loss to be recognized. Understood? Have you understood this point? Follow. Have you understood this point? Fast. Yes, sir. Now, whatever impairment loss you have calculated, that you deduct from here, that you deduct from this working note, so this will be carrying amount of goodwill which will come in the balance sheet. Understood this much? So calculation of goodwill also you have understood. Calculation of impairment loss also you have understood. Now the next step is what? Calculation of remeasurement gain and loss on previously held equity interest if step acquisition. This point will come if there is a step acquisition. If there is no step acquisition, then this working note will not come. Simply this will be fair value of that investment on the date of acquisition. Compare with the carrying amount of that investment on the date of acquisition. Suppose the 40% you acquired previously, this is the 40% fair value, this is the 40% carrying amount, and this will be a remeasurement gain and loss. Remeasurement gain and loss can be transferred to PL or OCI as per the classification of investment. If the investment was classified as FBTPL, then this will be transferred to PL. If the investment was classified initially as FBTOCI, this will be transferred to OCI. But if question is silent, and question will be always silent only, this will be transferred to PL. From PL it will go to retained earning. Correct now. So if question is silent, this will be transferred to PL. Understood this point? This also you have understood. So repeat last part. You are saying about this part, about partial goodwill. Right shares they will not ask. Right shares they will not ask. Right shares means it is nothing but equity share during post acquisition period. It's as simple as, so normally this type of question they don't ask. Right shares issued, they don't ask. Correct now. So Rishi, right now don't ask me any new adjustment. You will also die, I will also die. I mean, this is not a right time to study new things. Correct now. Rishi, concentrate from examination point of view. You will also die, I will also die. Correct? So you want that thing, I also die in this situation. This is not a time to ask this type of question. This question you should ask me when we were doing classes. जब आप क्लास पढ़ रहे थे तब पूछना चाहिए था, तब तो पूछते नहीं हो आप, करेक्ट? अभी राइट नाउ वट एवर आई एम टीचिंग टू ओनली दैट मच, टू ओनली दैट मच, बट दिस पॉइंट स्टिक टू दैट. Any doubt is coming which I am not teaching, ignore that, because then तो I need to teach entire thing. अभी पूरा पढ़ना है तो then join my regular batch, regular batch join कर लो. Doing expected question will ensure. अरे भाई just पहले concept तो समझ लो ना. Suppose some question is coming from outside the expected question, you should be able to do it now. Therefore I am doing this. Are you able to follow me or not? Or you want me to do only question, then I am coming to questions only. Do you want me to take only questions? Everyone respond. This question I will do after concept only. So please be with me. Be with me. Then only I can help you. Otherwise, I can't help you. Okay, chalo. So up to this, have you understood? Have you understood remeasurement gain and loss? Now, next point is elimination of URP. Normally, this type of question will also come. They will give you annualized profit. Correct. Now, first we need to calculate annualized profit. However, there can be two type of transaction. One is goods sold by subsidiary, goods sold by parent company to subsidiary company, or goods can be sold by from subsidiary company to parent company. Whenever goods is sold by parent company subsidiary company, we call it downstream transaction, and whenever goods are sold by subsidiary company to parent company, we call it upstream transaction. Whatever transaction is given, first you need to calculate URP on unsold stock. So find out total goods sold, whatever given the question. Correct. Normally this is sale price of goods sold. The sale price of goods sold. Then find out the total unsold stock. Correct. Now suppose they have given 1 lakh goods sold. Out of that 25% is unsold. 25% of 1 lakh will be unsold. So this become 25,000. On this URP will be there. So you need to calculate URP 25,000 into profit margin, into profit margin. Profit margin. Now profit margin can be given two ways. Suppose profit margin has been given, it is 20% of sales. 20% of sales. Then to do 25,000 into 20% directly. But suppose they have given it is 25% of cost, or they have given cost plus 25%. Correct. Now yeah, they have given markup is 20. Markup means we have added to the cost price, so they have given 25% of cost. Then we'll do 25,000 into 25 by 125. I hope this point you know from bachpan. This point you know from bachpan. So be careful what is the profit margin given, whether it is based on sale or whether it is based on cost. Based on that, calculate unrealized profit on unsold stock. Once you have calculated unrealized profit, now the journal entry depend upon downstream transaction or upstream transaction. Now if it is downstream transaction, means it is a profit of parent company included in the stock of subsidiary company. The profit of parent company belong only to parent company. Therefore one journal entry will do retained earning account debit stock. The retained earning will reduce and stock will be also reduced in the balance sheet. But if it is down upstream transaction, it means the profit of subsidiary company is included in the stock of parent company. The profit of subsidiary company is attributable to two party. One is parent company and NCI. Therefore, we will pass one journal entry. Retained earning account debit, NCI account debit to stock. Means first reduce retained earning, then reduce NCI, and then reduce stock in the balance sheet. Suppose this is 80%, so 80% of URP. This will be 20% of URP. Understood? Have you understood? I think this concept is very easy. Elimination of URP on unsold stock. I hope you have understood also. No doubt in this. बताओ. This also you have understood. आगे चलें. बोलो. Have you understood analyze profit? Please explain upstream, sir. Upstream means what? If goods are sold by subsidiary company to parent company. It means the, can you say, in the stock of parent company, profit of subsidiary company is included. Now profit of subsidiary company means URP, unrealized profit, is of subsidiary company. Now any profit of subsidiary company belongs to two party, parent company and NCI. It means, can I say, profit of subsidiary company is actually belonging to two party, so you need to allocate it profit in two party. As we have done in AOP, AOP is also profit of subsidiary company allocated to what? Parent company NCI. So this is also profit of subsidiary company will be allocated to two part. One is parent company profit will be reduced from retained earning. NCI share of profit will be reduced from NCI. So we'll do retained earning account debit, NCI account debit to stock. Now understood? Palachandra? No. Out was this? Balaji. Balaji? Yes, sir. Now the last working note from examination point of view will be working note of other equity and NCI. Other equity and NCI. Correct. This is very important, and be careful about this. We write on retained earning, general reserve, OCI and NCI you can do also separate working note, but it will wastage of time. So I will say in this format only do. Correct now. So these are nothing but reserve and surplus. Whatever you have taken in SONA, or analysis profit, that reserve and surplus. So first write on balance. So for these all, write on balance from parent company balance sheet. Whatever balance, closing balance is given in the parent company balance sheet, that you write down. So this will be from parent company balance sheet. And NCI, as per the working note, whatever you have done NCI measurement, that you write down from that working note of goodwill or gain or bargain purchase. Whatever NCI you have measured initially, that amount will come. Correct. Now we write down plus minus any rectification in the books of parent company books. Now suppose any rectification has been done in the parent company books, so with that any profit increase or profit decrease will be rectified. So that rectification you do in the retained earning as per the information given in the question. Understood? I am explaining English only. I am not using Hindi. I have used Hindi. Back. Hello. Any rectification in parent company books? Understood? Have you understood this? Yes, sir. Then what we'll do? We'll do sharing profit or loss of subsidiary company. So sharing profit or loss of subsidiary company will go towards SONA. SONA may be calculated that post acquisition profit. So there we have written PL and retained earning. PL general reserve and retained earning. So you write on retained earning. So can you say parent company share will come यहाँ पर in retained earning and NCI share will come यहाँ पर in NCI. Understood? And general reserve, parent company share will come in general reserve and NCI share will come in NCI. Understood? So this sharing profit or loss of subsidiary company, you take the amount from post acquisition profit in SONA. Post acquisition profit is SONA. Understood? And that you allocate in parent company NCI. Similarly, any share in OCI of subsidiary company. So I have taken an example of revaluation gain OCI component. So that figure you take from SONA post acquisition profit, and this will be allocated to parent company. Parent company will come in the OCI of parent company and NCI share will come in NCI. Understood? Correct. Have you understood this point? Why I am writing plus minus? If it is a profit, then do plus. If it is a loss, then do minus. Chalega? Yes, sir. This much you understood? This you ignore. This you ignore. Understood? Now, can you say then we'll do minus unrealized profit minus URP. So if it is downstream transaction, then can I say profit is only belonging to parent company. So you'll allocate that you'll deduct URP from only retained earning. But if it is upstream transaction, then deduct URP from parent company as well as from NCI as well as from NCI. Understood this point? Right. So unrealized profit if downstream, then deduct only from retained earning. But if it is upstream, deduct from retained earning and NCI. Correct. Then impairment loss of goodwill. Impairment loss of goodwill, whatever we have calculated. If it is full goodwill, then deduct from parent company and NCI both, because full goodwill impairment loss will be attributable to both. But if it is partial goodwill, then allocate only to retain or allocate only to parent company and deduct only from retained earning. Correct. Understood. Then any remeasurement gain loss in case of step acquisition will be transferred to PL. So this will be added to what? Retained earning. This will be added to retained earning, and loss then deduct from retained earning. This is the entire effect on the date of consolidation, and this will be the balance which will be shown in the balance sheet, consolidated balance sheet. Understood? Have you understood all the points of this? Have you understood all the points? Yes, sir. Now just listen one point. However, I will say you can ignore that point. But suppose sometime as per ICI solution, I will say don't follow that solution. ICI solution, I have said यहाँ पर ना, I have said यहाँ पर कि this is profit after dividend. If you have allocated profit after dividend, then okay, whatever we have done till now, that is correct. So if you have allocated profit after dividend to parent company NCI, then whatever we have said, that is correct. Then no adjustment required for dividend in other equity. But suppose you have calculated profit before dividend, and first you allocated profit before dividend, then you need to do minus dividend received also. In some of the ICS solution they are doing in that way. Just try to. Suppose you calculated profit before dividend. Profit before dividend means suppose you have not deducted dividend from Sona. You have not deducted this dividend from Sona. So this will become profit before dividend. So you are allocating profit before dividend in other equity. Correct now. So then dividend will be left. So then in that case I have written one note. Suppose you are following that, because some of the class I have done that also as per ICS solution. Then do minus dividend received from subsidiary company if profit of company is before dividend. If the profit whatever you have allocated is before dividend, then do minus dividend received from retained earning and NCI. So ultimately your effect will remain same. I will say ignore this. Ignore this if dividend has been deducted in Sona, and that is only more easy, more simple to understand. This is actually thoda sa complicated. I will say ignore this. Dividend has been deducted in Sona. Understood? I will say ignore this. Completely ignore this. Got this point? So if in my class I have done this as per ICS solution, now you can ignore, because this may complicate it. If you have understood, okay. If you have understood, everything is okay. Chalega. Have you understood this point? The last adjustment is what? About cancellation of intercompany balance, but this adjustment will be done in consolidated balance sheet. It will not affect the profit of parent company and subsidiary company. Suppose there are three types of transactions. Suppose there are some payable or receivable that need to be cancelled. So we'll do trade payable account debit to trade receivable. Normally what happens? This is 10,000. So this will be also 10,000. But sometime in the question they will give this as 9,000 and this is 10,000. So difference will be considered as check in transit. The difference will be considered as check in transit of rupees 1,000. Got this point? So any difference in this journal entry will be check in transit, and that check in transit will be shown in the balance sheet under cash and cash equivalent. Will be shown in the balance sheet under cash and cash equivalent. Understood? Second cancellation is for bill payable and receivable. So bill pass, bill payable account debit to bills receivable, and bill payable will reduce and bills receivable will reduce in CBS. Now suppose they have given 10,000 and 10,000. Means bill drawn is 10,000. So bill accepted is 10,000. So drawer and drawee, so parent company may be drawer and subsidiary company may be drawee, or vice versa. This is given, so thank you very much. But sometime they have given some bill has been discounted by the drawer. If some bill is already discounted by the drawer, so this will be 10,000, and this may be 8,000 because 2,000 has been discounted. So whatever discounted, that will come as bill payable the balance sheet. That will become as a bill payable in the balance sheet. This is the difference. Write down bill payable in the balance sheet. Understood? Correct. So this bill payable is nothing but bill which has been discounted, by drawer. So that will remain in the balance sheet. That will remain in the balance sheet as a liability. Understood this point? Have you understood this point? Correct. Now one more particular point came in the last exam. However, that particular information was not correct. Now suppose debenture, there was a debenture of subsidiary company, and holding company, parent company, has invested in that debenture. Correct now. So now now there is no concept of nominal value. Now the debenture will come at amortized cost now, because it is a financial liability. It is a financial liability. I hope you are understanding whatever I am saying. बोलना रे, are you able to understand? मेरी बात समझ पा रहे? But in that question it was given at nominal value. नालायक 1 lakh, 1 lakh. चलो nominal value दे दिया 1 lakh, and the parent company has purchased that at 1,20,000. Suppose they have purchased at 1,20,000. Suppose. So of course this need to be cancelled, but this was actually not correct from Ind AS point of view. But can't say the question is wrong now. So suppose this they have given this information, so this will be cancelled. Debenture and the investment debenture will be cancelled, and the difference will be transferred to profit and loss account, means retained earning, because this will be considered gain or loss on cancellation, and gain or loss on cancellation will be transferred to PL. So any difference will be adjusted in retained earning. Understood this point? Have you understood this much also? So this we have done all the adjustment for a basic question. Basic question means not chain holding. Chain holding I will do separately. Any doubt? Follow. Now, normally what happens, just try to understand. In every question, the fair value of consideration paid. The fair value of consideration paid means what we have done यहाँ पर ना. When we are calculating goodwill, so the fair value of consideration paid will be given the question as cost price of investment. But if this is not given, then calculate PC. As per Ind AS 103. Then we need to calculate PC as per Ind AS 103. So PC will be equal to cash payment plus fair value of equity shares issued, fair value of deferred consideration, fair value of contingent consideration, means whatever we have done in what? Ind AS 103, that will be applicable as per the information given. The question, it is quite possible that suppose cost price of investment is not given, so you need to calculate PC in that case. Got this point? So that type of question can be also asked. Then we take some questions. Chalo. Directly you want me to take a good question or some simple question? बताओ. You want me to take directly one good question or one simple question then good question? Hello. What do you want from my side? You want directly a good question? One good question? Directly one good question. Is that question will cover all the points? First simple question, then good question. Chalo bhai. Expected question come. One question is there, DF acquired 100%, but I will not take 100%. I will take one question from my book. From my book. This type of question, whatever question I am taking now, this question have been asked, similar question have been asked 3 times in exam. Correct? But question number 27. Come to question number 27 of my question bank. Come to question number 27. What is given? Ram acquired 60% of ordinary shares of 100 each of Krishna Limited on 1st October 2001. This become the date of acquisition. First find out date of acquisition. Date of acquisition is what? 1st October 2001. On 31st March 2002, this become date of consolidation. Date of consolidation. The summarized balance is given. Just read the balance sheet fast. Yes, sir. The retained earning of Krishna Limited showed a credit balance of 60,000 on 1st April 2001. This is the opening balance of retained earning. Out of which dividend of 10% was paid on 1st November. So dividend was paid, but before acquisition ki after acquisition, 1st November. So dividend has been paid after acquisition. Ram Limited has credited the dividend received to retained earning. This point is not important to ignore. This point you ignore. So they have credited to PL. So thank you very much. Dividend will be credited to PL only. From PL it will go to retained earning. So this point is actually not relevant. Okay. Fair value of plant and machinery on 1st October 2001 was 4 lakh. The fair value on the date of acquisition given. Correct. The rate of depreciation of plant and machinery is 10%. Now they have given rate of depreciation 10%. You only say if nothing is given, we'll apply SLM ki RBM. If nothing is given, we'll apply RBM. Following are the changes. Changes means they have given the fair value gain and loss of in the fair value as per respective index from the value on the date of acquisition only, which is to consider while consolidating the balance sheet. You can see they have given trade payable. They have given positive. Positive means increase. Positive means increase. And land and building 2 lakh positive and inventory to 30,000 positive. So this is increase. Correct. So this increase means gain, but this increase means loss. Understood? It may be assumed that inventory is still unsold on the balance sheet. Like inventory will remain unsold, so there is nothing sold during the post-acquisition period, and the trade payables are still not yet settled. The trade payable is not yet settled means always will assume that only if the question is silent. Also assume that other reserve as on 31st March 2002 are the same as on 1st April 2001. This is also general assumption. The opening balance of other reserve and surplus apart from return earning will be always same to what closing balance. So these are general assumptions which I have already informed you. Prepare consolidated balance sheet. Can we do it? Start करें. Have you understood the question? The first adjustment what will do? First what will do? बोलो. And hold on. I mean, I'll take 2 minute break. 2 minute break I'll take. ठीक है ना? Okay. Oh, 1 second. Ah, okay. Okay. 1 second I will start. My mistake. I have not. Now it is audible. Okay. Sorry. My mistake. Sorry. Now it is audible. Yes, sir. So what we'll do? First, we'll do fair value adjustment. We'll do fair value adjustment for the all the asset for which fair value information has been given. Yeah, changes in the fair value has been given. They have given for plant and machinery, land and building, inventory and trade payable. But for land and building, inventory and trade payable, they have given changes in the value of the asset. So you can see directly we can write down fair value gain for land and building because increase has been given. Correct. Now for inventory we can have fair value gain because increase has been given. For trade payable it is fair value loss because increase has been given. This much you have understood. But for plant and machinery, they have given fair value on the date of acquisition. So what is the fair value on the date of acquisition given? 4 lakh. But they have not given carrying amount of the date of acquisition. You can see they have not given carrying amount on 1st October. So we need to first calculate carrying amount on 1st October. For that, we need to first find out what is the closing balance of that plant and machinery. So you can see closing balance of plant and machinery is given in the balance sheet of subsidiary company, and that is given how much? That is has been given 3 lakh. The closing balance has been given how much? Sorry, 2,70,000 it has been given. 2,70,000. Okay, from this 2,70,000 we can find out opening balance, because this closing balance will be after depreciation. If that is 10%, so this will be 90% of opening balance. So we'll do divide by 90%. We'll get what? 3 lakh. So 3 lakh become opening balance. Opening balance means on 1/4, but we want on 1st October, means from this we should deduct 6 month depreciation. So 10% into 6 by 12 will do on 3 lakh. So it will come how much? 15,000. So can I say 15,000? So can I say the carrying amount on the date of acquisition will become 2,85,000? 2,85,000. You can see we have written 2,85,000. Have you understood this point? This point have you understood? So 4 lakh minus 2,85,000, it will become 1,15,000. 1,15,000 become fair value gain. Fair value gain. So sometime in the question, to cross check your presence of mind, they will not give directly carrying amount on the date of acquisition. You need to find out carrying amount on the date of acquisition by doing some back calculation. Just chalega? Yes sir. Then can I say, just try to understand, we'll find out additional depreciation on this because it is RBM. So what will use RBM? We'll use fair value. What is the fair value given? 4 lakh. And what is the opening balance? Opening balance 3 lakh. So 4 lakh minus 3 lakh. This is dangerous. Normally you will do 4 lakh minus 2,85,000. That is not correct. It's 4 lakh minus 3 lakh is 1 lakh. 1 lakh into what? Rate of depreciation 10%, and post acquisition period is 6 by 12. So it will come 5,000. So 5,000 become additional depreciation that will be deducted, and this will become net changes on the date of consolidation. Net changes on the date of consolidation. Now inventory remain unsold, so no changes. No changes. Trade risk inventory, sorry, this was land and building. In land and building, no depreciation, no rate of depreciation has been given. So for land and building, no rate of depreciation has been given. So ignore depreciation adjustment. For inventory, it is given unsold, so no adjustment यहाँ पर. For trade payable, it is given unsettled, so no adjustment यहाँ पर. And therefore, this same amount will come at on the date of consolidation. But suppose they have given 50% of such inventory has been sold. Suppose they have given, so we'll do minus 15,000 from यहाँ पर, and the balance will come on the date of consolidation. Suppose they have said कि 20% has been settled for trade payable, so 20% means 4,000 will do यहाँ पर, and the net amount will come in the consolidation date. Got this point? Have you understood this entire point? Have you understood this entire point? This become fair value adjustment. Any doubt? Working note number 1 done. Understood working note number 1? Now let us come to working note number 2. Working note number 1 done. Everyone respond. Yes sir. Now come to working note number 2. Now we'll do analysis of profit of K Limited. K Limited means Krishna Limited, means subsidiary company. Correct now. So can you see they have given retained earning and they have given other equity, other reserve, retained earning and other reserve. So first write down closing balance from the balance sheet, then write down opening balance. The opening balance of retained earning has been given in additional information, but opening balance of other reserve is not given. So we'll assume it is equal to what? Closing balance. However, that assumption is also given in the question. Then we'll find out profit after appropriation. So this will become 1,04,000 and this will become 0. Correct. Now there is just find out whether there is any error given. No error given. Whether any abnormal loss, no abnormal loss. Whether any final dividend paid, yes, final dividend has been paid. That is what 10. That is given 10%. So 10% of equity share capital of subsidiary company will find out. So you can see plus final dividend we have done plus final dividend paid 10% of equity share capital of subsidiary company. That will come 40,000. That will come 40,000. Understood. And this will become profit earned by the subsidiary company, and there is no bonus share adjustment also here. So this will become simple profit earned. This will be allocated to pre and post acquisition profit. So pre is what 6 months and post is 6 months. So we have done 72. And there is no abnormal item adjustment यहाँ पर. Got this point? Have you understood AOP? AOP understood? Once working note done, just say yes sir, we have understood. Then we'll come to next working note. चलेगा? Yes sir. Then we'll do statement of net asset of Krishna Limited to be write on date of acquisition, post and date of consolidation. Can I say because there is general reserve for post acquisition period is nil, therefore I have not written that 2 column. So this entirely belong to retained earning. Entirely belong to retained earning. Correct now. So equity share capital, first write down closing balance, and closing balance will be equal to opening balance. Then for other reserve, can I say we write down opening balance plus pre-acquisition profit. So opening balance was 2 lakh and there is no pre-acquisition profit and there is no post-acquisition profit. And for retained earning, we write on opening balance plus pre-acquisition profit. So opening balance was 60,000, pre-acquisition profit is 72,000. So 60 plus 72, how much it is coming? 1,30,000. With 1,32,000 will come on the date of acquisition, and the post-acquisition profit 72,000 will come in the post column. This will become the total. This is only the total write on 2,04,000. Then just find out the total कर लो. Understood? Correct. Now you only say we'll do minus dividend paid. You only say minus dividend paid. Final dividend paid will do. The final dividend paid will do from date of acquisition की from post column बताओ. Hello. Post acquisition cost. Why? Because it is paid after acquisition. So how much dividend paid? Dividend paid is how much? बताओ. Dividend paid is 40,000. So deduct 40,000 from this. Correct. We'll deduct 40,000 from post acquisition column. Then we'll do fair value adjustment as per working note number 1. So plant and machinery, land and building, inventory and trade payable. What was the fair value gain or loss? So can you say it was 1,15,000 for plant and machinery, then 2 lakh for land and building, then 30,000 for inventory as per working note number 1, and then there was a fair value loss for trade payable, so minus 20,000, because again there is an increase in liability. The increase in liability will reduce your net asset. Correct. And there was one post acquisition additional depreciation of 5,000 for property, plant and equipment. So 1,15,000 minus 5,000 will come 1,10,000. Then just find out the total we can find out. So this will become 72 minus 40 minus 5. So this will become 27,000. Understood? Any doubt? Any doubt in this? Correct. I think Sona also you understood. Yes sir. Now come to working note number 4, that is goodwill. Again on bargain purchase, so we'll find out fair value of consideration paid for 60%. What is the cost price of investment given? Check karo. So in the balance sheet they will give cost price of investment. That is how much? 8 lakh. To 8 lakh is given. There is no step acquisition in this. So directly write on 8 lakh for 60%. Now 40% NCI will be calculated. No information about fair value has been given. So we'll use Pasina method. So you can see value of NCI by using Pasina method. So that will 40% of fair value of INA on the date of acquisition. So 40% of 10,57,000 will calculate. 40% of 10,57,000 will calculate. So that will become 4,22,800. Make a total of this. Then minus fair value of INA 100% minus करेंगे तो that is 10,57,000 and you will get goodwill which will be partial goodwill understood. Simple. Then we'll do other equity and NCI. So we write down other reserve, retained earning and NCI. These two balance will come from parent company balance sheet. Understood. Correct. Now just try to understand what we calculate 27,000. 27,000 is profit after dividend. If you want profit before dividend, what we'll do? We'll do plus 40,000. यहाँ plus 40,000 कर दोगे. So plus 40,000 is equal to is nothing but 67,000. So this become profit before dividend. So if you are allocating profit before dividend, then also do minus dividend received. Or you can directly allocate 27,000. Both answer will come same. Means just try to understand. Because I have just given shortcut, so you can allocate 27,000. You can allocate 27,000 to parent company NCI. So 27,000 into 60%. How much? That is 10,800. So you will minus 10,800 from this, and minus equal to, you will do minus. So 16,200. We'll do minus 16,200 from this, and 10,800 from this, and you can see the sum total of this, the net effect of this will be the same only. So either do this or do this, don't do both. Have you understood this point? So 27, I will say in exam do 27,000 allocation, that is shortcut, that will save your time, and that will, in that you will never do mistake. This is thoda sa I will to require more conceptual understanding. चलेगा for this point. So can you say minus 16,200 and minus 10,800 will do, and this balance will come, and this balance will be shown in the balance sheet, and now you can prepare consolidated balance sheet. Understood? Now whenever you are preparing CBS now, so always say in this way, the asset में करना book value plus minus any adjustment. For example, can PP, you have written book value plus book value, correct? Book value, they are two actually, plant MS and land and building. So book value of plant MS and land and building, this is total book value I've written. Then adjustment, you can see for PP what was the net adjustment, 1,10,000, and for land and building that is adjustment 2 lakh. So this become what? The balance sheet figure. Good will always come. So the formula is what? Book value plus minus adjustment. Correct now. Can you see this equity share capital and other equity will come from working, other equity will come from working note. So this is other equity. Other equity will be the sum total of these two. And if there is a gain on bargain purchase, that will be also transferred to other equity. This will be shown separately in the balance sheet. So format I am assuming that you know. So balance sheet preparation you do by your own. I am not explaining balance sheet preparation. चलेगा. So this is one simple question we have done. Now we'll take one good question. Are you ready for good question? Can I take one good question? To come to expected question, the good question is what? Ishwar and Krishna Limited. This question number 8, question number 63 of my question bank. This newly inserted question, till now not asked, can be asked in exam. Ishwar Limited hold investment in Vinayak Limited. The draft balance sheet of two companies is given. You can see draft balance sheet has been given. Additional information. Ishwar Limited investment in Vinayak Limited. On 1st April 2001, Ishwar acquired 400 million shares in Vinayak Limited. They have acquired 400 million shares. 400 million shares out of what? You can see the total share capital is 5. This is 5 lakh in what? 1,000. In 1,000. And they have given here figures in millions. So be careful. 1 million is equal to 10 lakh. 1 million is equal to 10 lakh. And the figure is given in 1,000. Correct now. So be careful. So this is 400 million shares. What is the face value? Share capital is what? One. This is 1 rupees shares. Rupees 1 shares. So it means, can I say, of course, can I say there are total 500 million shares. So 400 divided by 500. It means how much is the number of holding ratio? 400 divided by 500 is equal to what? 80% they have acquired. 80% they have acquired. Correct. By means of a share exchange of 1 shares in Iswa Limited for every 2 shares acquired in Vinayak Limited. So they have given information to calculate PC. In this you need to calculate PC. So 1/2 is the swap ratio. On 1st April 2001, the market value of shares of Iswa Limited, its parent company, is 7. Yes, sir. Iswa Limited appointed a professional firm for conducting due diligence for acquisition of Vinayak Limited, the cost of which amounted to rupees 15 million. 15 million is the cost. So can you see, if you want to convert this 15 million into 1000, so you will add 30. So can you see, this will become 15,000 in 1000, 15,000 in 1000, because it will be 150 lakh. That's right, 150 lakh. 150 lakh in 1000, it will be 15,000. So be careful, because in balance sheet all the figure is given in 1000. Correct. So I will say, if you want to convert millions into 1000, so add 30. Add 30. Simple sa baat hai. Got this point? Yes, sir. So 15,000. Iswa Limited included this acquisition cost in the carrying amount of investment in Vinayak Limited in the draft balance sheet of Iswa Limited. This has been added to the cost price of investment, which is not correct. Can I say any direct cost of acquisition as per Ind AS 103 will be charged to PL account as an expense? So this become one error, but error in the books of parent company. Error in the books of parent company. There has been no change in the carrying amount of this investment in Iswa Limited own balance sheet since 1st April 2001. So can you say this actually, this investment include what? One PC plus 15,000 also included, or there may be some other investment also. There may be some other investment. So this has been wrongly debited to investment account. So you need to charge it to profit and loss account. This is one error. This is one error. Chalega. On 1st April 2001, the individual financial statement of Vinayak showed the following balance: the opening balance of retained earning and opening balance of other component of equity. Other component of equity means it is other reserve. The directors of Iswa Limited carried out a fair value exercise to measure the identifiable asset and liability of Vinayak Limited as on 1st April 2001. The following matters agreed. The property having a carrying amount of 800 million. So there was one property having a carrying amount of 800 million, out of which land company is 350 and building company is 450. So this property have land and building as well as. Had an estimated fair value. Fair value is also given 1000 million, in which land is 400 and building is 600 million. The building component of the property had an estimated useful life. Remaining life is what? 30 years. 30 years the remaining life. So this is fair value adjustment के लिए काम आएगा. Plant and equipment having a carrying value of 600 million had an estimated fair value of 700 million. The estimated remaining useful life of the plant is 4 years. So they have given 4 years. Everything you need to circle. Circle करते जाओ. In exam also circle it. On 1st April 2001, the notes to financial statement of Vinayak Limited disclosed a contingent liability. On 1st April 2001, the fair value of contingent liability was reliably measured at 30 million. Now what Ind AS 103 says that any contingent liability of acquiree can be recognized in the books of acquirer if the fair value can be measured. Fair value is given, so it will be recognized in the balance sheet of acquirer as a provision. So provision is given, but can I say carrying amount will be 0? Carrying amount will be 0. The contingency was resolved in the year ended 31st March 2002 and no payment was required to be made by the Vinayak Limited in respect of this contingent liability. What was the date of acquisition? See, in this date of acquisition was what? The shares were acquired on 1st April 2001 and the date of balance sheet is what? 31st March 2004. That means after how many years? So 2001, 2002, 2003, 2000 means 3 years. So post acquisition period is 3 years. So here post acquisition period is 3 years. Be careful about that. The fair value adjustment have not been reflected. Have not been reflected. The fair value adjustment has not been reflected in the individual. Oh. Oh, what is given? The fair value adjustment have much. I am teaching that this iPad is now not working properly. 1 minute. What is given? Check करेंगे. The fair value adjustment have not been reflected in the individual financial statement of Vinayak Limited. The consolidated financial statement, the fair value adjustment will be regarded as temporary difference. So whatever fair value gain or loss will come, that will be the temporary difference. Correct now. For the purpose of computing deferred tax, the rate of deferred tax is 20%. It means you need to do deferred tax adjustment also in this. The directors of Visual Limited use the proportionate of net asset method when measuring the NCI. For measuring of NCI, we need to use Pasina method, proportionate share in INA method. Then impairment review of goodwill. In this, they have also asked you to calculate impairment loss. No impairment of goodwill on acquisition of Vinayak Limited was evident when the review are carried out in first year and second year. On 31st March 2004, the directors of Visual Limited carried out further review and concluded recoverable amount is given 2000 million. 2000 million to convert in what? Thousands. Correct now. Vinayak Limited regarded as a single CGU for the purpose of measuring goodwill impairment. That only I have said. So entire subsidiary will be a single CGU. Provision. One more adjustment. This is one again. One error is given in the books of parent company. Two errors are given on 1st April 2003, not on the date of acquisition. 1st April 2003 is at the beginning of current year. I will say. Visual Limited completed the construction of a non-current asset with an estimated useful life of 20 years. The cost of construction were recognized PP and depreciated appropriately. Visual Limited has a legal obligation to restore the site on which the non-current asset located on 31st March 2043. The estimated cost of this restoration was as on 31st March 2043 was 125 million. This was the future expenditure. So as per India 16, can the present value of this expenditure will be capitalized. The directors of Visual Limited have made a provision. They have made a provision of 6.25 million. What they have done? What they have done? 125 million divided by 20. This is not correct. So they have created provision of what? 6.25 million. And they have not capitalized it. They have only created a provision in the draft balance sheet and they have not capitalized it. So this is one error. So we need to rectify it. An appropriate annual discount rate will be how much? It will be for 20 years 31.2 paise. 31.2 paise means 0.312. 0.312 in rupees. 0.312 in rupees. Chalega. Got this fine? Any doubt? Any doubt? No doubt. Previous CBS बनाना है. So this is the entire question. Now let us do the solution. So this error wala point will do at the end because error will affect only other equity working note. That will do at the end. Chalega. Can we start the solution of this? Yes, sir. I'll come to the solution. Solution. So in this, can I say first we need to calculate PC because PC information, the cost price of investment has not been given. How much is included in the investment? Whenever the question, just try to understand. Whenever they have given question in this way, how to whenever they have given only investment. So this is not only not an investment in the equity shares of Vinayak Limited. So this means this include many other investment also. So whenever this type of questions given, it means you need to find out the cost price of investment. Whenever they say investment in the equity shares of Vinayak Limited, it means this is nothing but PC. Whenever they are given only investment, so be careful. Be careful. Then you need to first calculate PC. That will be the amount of investment which will be included in this particular investment. Chalega? Yes, sir. So how to calculate PC? So they have given, they have purchased how many shares? They have purchased 400 million. So 400 million is how many in thousand? So 4 lakh thousand shares they have purchased. What is the swap ratio they have given? 1/2. And what is the fair value of shares of Iswar company? That is given 7. So can you say this number of equity shares they have issued? So 2 lakh shares they have issued at rupees 7. At rupees 7. At rupees 7. So it means 14 lakh is the amount of PC. 14 lakh is the amount of PC. This is the cost price of investment. This is the first working note is required whenever they have not given the cost price of investment. This can I say this 21 lakh 15,000 consists of 3 elements. 14 lakh is PC. 15,000 is that acquisition cost which will be eliminated from this, and the balance is what? 21 lakh minus 14 lakh. So 7 lakh will be other investment that will remain in the balance sheet. That will remain in the balance sheet. First point, have you understood? First point, have you understood the calculation of PC done? Now we'll do fair value adjustment. Now fair value adjustment, they have given for land, they have given for building, they have given for plant, they have given for liability. So fair value is given, you can write on fair value in 1000, write on in 1000. So all the fair value has been given in the question only. Carrying amount is also given in the question. Carrying amount of this provision, this liability is nothing but provision which has been acquired. So this is nil. So you can find out fair value gain or loss. So this is gain, this is gain, this is gain, and this is loss. Understood? Now we'll do depreciation adjustment. So can you say additional expense adjustment for the post acquisition period? So for land, no depreciation, ignore. For building, they have given that estimated useful life is 30 years. So we'll do divide by 3, and the post acquisition period is 3 years. So we'll do 1,50,000 divided by 30 into 3. This will be the post acquisition additional depreciation. Property, for plant they have given useful life is, remaining useful life is 4 years. They have given the question. So we'll do 1 lakh divided by 4 into 3. This will come 75,000. And for provision they have given, now it is no longer required. It will be reversed. No longer required to be reversed because that has contingency has been resolved. So that will reverse. So this will become nil. Means do you have plus 30,000 because this is minus 30. So this will be plus 30. And this will be 0. This will be 0. So this will be net changes on the date of consolidation. Have you understood this? Have you understood fair value adjustment? Fair value adjustment understood fast. Understood? Yes, sir. So next working note, once you have done fair value adjustment, now we'll do AOP. Come to AOP. In this, I have not done AOP. Why I have not done AOP? Because on the date of acquisition and the date of acquisition is year beginning only. Therefore, AOP was not required. Correct. Now you can use the shortcut, and there is no adjustment. Final dividend paid is not given. Error is not given. Means error in the books of subsidiaries is not given. Abnormal item is not given. There is no bonus adjustment. Therefore, AOP was not required. You can ignore it. You can ignore it. So directly we can come to Sona. Directly we can come to Sona. So date of acquisition, then post. There are two: retained earning and other equity, and the date of consolidation. So here we write down the equity share capital 5 lakh, 5 lakh given from the balance sheet. From the balance sheet we can add on 5 lakh, 5 lakh. Now retained earning, opening balance you write on यहाँ पर, and the difference between closing balance and opening balance will be post, because there is no adjustment. Directly we can do. You can see opening balance is given how much? The question, opening balance is given how much? 750 million is 7,50,000. And closing balance given how much? 10,50,000. Difference will be post because there is no adjustment in AOP. AOP, if you are doing also, same thing will come, because entire 3 year is post acquisition period. Entire 3 year is post acquisition period. Correct? Yes, sir. I'm coming to your doubt, Bala. Then other equity also. Other equity. Can you say opening balance will come यहाँ पर, closing balance will come यहाँ पर, and this will be post. So this will become what? Total. Now there is no dividend paid in this question, so directly we'll do fair value adjustment. So we have done fair value adjustment, land, building, plant, as per the working note, whatever we have done. Check karo, that only we have done. Correct? Understood. Means same as per working note number 1 we have done, working note number 2 in this question. Correct. Then we'll do plus minus deferred tax adjustment. So you just find out this. This is net gain or net loss. Batao. So 50,000 plus 1,50,000 plus 1 lakh minus 30,000. Okay, this will become 2,70,000, and this 2,70,000 is net gain. Net gain means what? taxable temporary difference. So on taxable temporary difference, we will create DTL. So DTL will be how much? 2,70,000 into 20%. This 20% is given the question. So 54,000 DTL will be created. That will be reduced from यहाँ से. Reduce DTL from this. Reduce DTL from this. Correct. And can I say this will be the reversal of taxable temporary difference? तो reverse कितना हुआ? 15 75 minus 30. 15 plus 75 minus 30. It means 60,000. So 60,000 into 20%. So you can see 12,000 will reverse DTL. The reversal of DTL will be added to the post acquisition profit. Means DTL को minus, when you created DTL में minus on the date of acquisition. In post acquisition period will add DTL. Means that will increase, reversal of DTL will increase the post acquisition profit. And after this will be the net DTL in the balance sheet. This will be the net DTL in the balance sheet. Got this point? So this will be the total of the INA on the date of acquisition and the date of consolidation. चलेगा? But have you understood this? Sona, have you understood? Have you understood, Sona? One doubt came for this provision. Just try to provision, to you have understood. Now we need to create provision on the date of acquisition. The fair value is given 30,000. Carrying amount is nil because that was not recognized in the books of subsidiary company. The carrying amount is nil. Correct now. Understood. Now it is given in the question. If we read the question, what is given? What is given in the question? It is given in the question. The contingencies. Oh, what is given? I am not able to. Not working only. One minute. 1 minute. Ah, everyone. What is given? Oh, oh. I'm not able to understand what is happening. You can see what is given. What is given? The contingency was resolved in the year ended 31st March 2002 and no payment were required to be made by Vinayak Limited in respect for this contingent liability. So it means now no provision is required. If no provision required, you reverse it now. So then you reverse in post acquisition period. So just try to understand, when you reverse the provision, so it will be just like a gain in post acquisition period, and therefore that amount of 30,000 has been added to the post acquisition period. Now understood this point? Have you understood this point? Yes, sir. That only we have done. Chalega. You can see. So you can see it is plus. Plus means it will be added to the post acquisition period, and that only we have done. Plus added to the post acquisition period. Now have you understood, Sona? Yes, sir. Now coming to calculation of goodwill or gain on bargain purchase. So can I say first we'll do fair value of consideration paid 80%, whatever we have calculated. This can be danger if you have taken this investment from the balance sheet. This is the area where you can do mistake. So be careful about this, because our habit is what? To take this figure from the balance sheet. Correct? Danger. 14 lakh already we calculated. Then we'll calculate NCI by using Pasina method. So 20% of fair value of INA. So fair value of INA was 14 lakh 91,000. So 20% of 14 lakh 91,000. This will be NCI. We'll calculate the total. Then we'll minus fair value of INA. We'll calculate goodwill. So we have calculated goodwill, and it is a partial goodwill. Now in this question they have also asked you to calculate impairment loss. So let us calculate impairment loss. So next working note will be calculation of impairment loss, and we'll consider entire subsidiary as one CGU, write down goodwill, then other asset, then total. So goodwill, partial goodwill is 2,07,200. This will come from the previous working note, and other asset will take from Sona from the date of consolidation. So this 17,68,000, you can see this is this figure 17,68,000, this figure. Understood? So this is the carrying amount of INA on the date of consolidation. So this become total. Now it is partial goodwill. We'll do grossing up, because this 80% will add 20%. This will become full goodwill, and then we'll find out total, and this total will be compared with the recoverable amount. Recoverable amount has been given. I think that has given 2,000 million. So 2,000 million become 20 lakh thousand. 20 lakh in thousand. Correct? Yes, sir. So this will become total impairment loss, and this total impairment loss will first allocated to goodwill only to the extent of their carrying amount. So you can see entire impairment loss will be goodwill. Now out of this 80% belong to what? Parent company, and 20% belong to NCI. So this will not be recognized, because that much goodwill was not recognized only. So we'll only recognize 21,600 as an impairment loss. Understood? And this impairment loss will be deducted from this. So this will be the carrying amount of goodwill to be shown in the balance sheet. Carrying amount of goodwill to be shown in the balance sheet. Have you understood this much? Have you understood this much? चलेगा? Then last point is what? Other equity NCI. Other equity NCI. But before that, let us do one error wala point. What they have given in the question, कि there was one provision to be recognized, and provision was not recognized. What was the information? Let me explain this point. So can you see the actual provision should be present value of this? It will be 1,25,000 in thousand into 0.312. This is coming how much? 1,25,000 into 0.312. That is coming 39,000. Means we should create a provision of 39,000 on 1st April 2023. On 1st April 2023. Correct. And this should be capitalized to the cost price of PP. Means what journal entry will do? Journal entry should be PP account debit to provision. But how much provision we have created? We have created provision of 6,250. So this will be reverse. So this has been charged to profit and loss account. So it will be added back to the retained earning. This will be added back to retained earning. Correct. What is the rectification journal entry that I am showing? You want to understand. Correct. So provision for DRSR. Can I say as on 1/4/2003 we should create this much provision? Can I say in that we'll add interest expense of 1 year? So interest expense will be added at a rate of 6%. This become carrying amount of provision to be shown in the balance sheet. What is the rectification journal entry? First on 1/4/2003 PP will increase by 39,000. Correct. And we should increase provision by the difference amount, because 6 6250 is already created. So 39,000 minus 6250, this much provision should be increased, and the balance will be created to retain earning. This balance will be created to retain earning. This is the first rectification journal entry. Now we'll add interest expense. So interest expense to retain earning account debit to provision. Interest expense will increase the amount of provision. And then on PP, this amount, can you say we should also charge depreciation for 1 year? So 39,000, 20 years the useful life. So 39,000 divided by 20, depreciation account debit to PP will do. That is 1950. So this will be also adjusted in retain earning and balance sheet. Retain earning and balance sheet. Correct now. Understood? Means you can see this yellow amount is affecting retain earning. This will be adjusted in retain earning. This PP will be adjusted. Means in balance sheet we should increase PP by 39,000 and then decrease by 1950. And provision should be increased by 32750 and 2340 and 2340 in the balance sheet. The balance sheet. Have you understood this rectification journal entry? Now let us come to other equity and NCI. Other equity and NCI. What is the other equity and NCI? First, these two balance we write down from the parent company balance sheet, and this will be as per working note, previous working note. Then there was one rectification of investment, 15,000 which was added to investment will be deducted from investment and will be created to retain earning. Means what journal entry will do? What journal entry will do? Follow. For this rectification, what journal entry? So deducted from retain earning. So it will be retain earning account debit to investment. So retain earning will decrease by 15,000. Retain earning will decrease by 15,000. Understood this point? Then sharing profit of subsidiary company. This is from Sona. Will do this calculation. 80%. This is 80% and 20% will do. This we can do. Then impairment loss of goodwill, because this partial goodwill will be entirely allocated only to parent company, to entirely allocated to only parent company, and this adjustment is for that provision via rectification. You can see provision wrongly debited to PL 6250. Then interest expense on DRS at 24340 minus, and depreciation on PP will be 1950. This is from working note number 7, whatever we have done. So this will be the amount of retained earning and other equity NNCI which will come in the balance sheet. Understood? If you have understood this much, then you can do by your own. The balance sheet you can prepare by your own. Understood? Have you understood? This question once you do by your own, because if this question, high probability this question can come in exam. There is a high probability. Got this point? अदर इक्विटी एनसीआई कैलकुलेशन 1 सेकेंड, चलो थोड़ा फास्ट कर दिया. तो दिस बैलेंस, चलो स्लोली बता देते. दिस बैलेंस विल कम फ्रॉम द बैलेंस शीट and this will come from previous working note. Then what was the share in Sona? This will be allocated to parent company NCI. That only we have done. Check karo. But damn, share in profit of subsidiary company, retain earning will be allocated to parent company and NCI 80% 20%. Other equity will be allocated to parent company NCI in 80% 20%. Then there is one impairment loss of goodwill, that is partial goodwill to entirely attributable parent company to deducted from retain earning. This much you understood. Now there were two error. One was investment का error. Investment में how much amount was wrongly debited? 15,000. That should be charged to PL account. Will pass one journal entry PL account debit to investment. So your retain earning will decrease by 15,000. So your retain earning has been decreased by 15,000. Understood? Then this error. What this error? So you can see this all, this amount you can see. You can see this to retain earning. This will be added to retain earning. Then this retain earning, this will be deducted from retain earning. This depreciation deducted from retain earning. So this will be adjustment. So you can see we have added 6250, then deducted 2340 and deducted 1950. This will become the closing balance of retain earning which will come in the balance sheet. Now have you understood? Now have you understood? Two questions we have done. of consolidation. Correct now. Now I'll take the concept of chain holding. Chain holding करते हैं. One question of chain holding, because chain holding is very important from exam point of view. This chain holding, only one type of question they have given, and they have asked three times in exam. Three times in exam. So I'll directly take a question of chain holding. The chain holding, the entire concept remains same. Entire concept remains same. Only three adjustment is new. There are three new adjustment that you need to be careful. Three new adjustment. Correct now. And that three new adjustment will not change your concept. Means here also same working node. Working node will be same. Pay value adjustment, then AOP, then SONA, then goodwill calculation, then other equity and NCI. Same thing. Correct now. So I will directly take one question to explain the chain holding. This is the question. Question number 6. Correct now. I have the solution also. You can see question number 6. Given below are the balances of group of company comprising LX, MX, NX. Whenever they have given this type of question, mostly this will be chain holding question. Chain holding means what? LX has invested in MX, MX has invested in NX. So MX control NX, LX control MX. So LX will also control NX. That is known as chain holding. You can see 17 lakh shares in MX Limited. LX has invested in the books in the shares of MX Limited. 9.6 lakh shares in NX Limited. MX has invested in the shares of NX Limited. Correct? Then what they have given? LX Limited hold 85% shares in MX Limited, which were acquired on 1st February 2020. For this is the date of acquisition. And MX Limited hold 60% shares in NX Limited, which were acquired on 30th September 2020. So this will be the date of acquisition. In this chain holding concept, we need to do prepare consolidation from the point of view ultimate parent company. Ultimate parent company is LX Limited. Ultimate parent company is LX Limited. Okay, there are two date of acquisition. Means LX Limited got control over MX on this date, and LX Limited got control over NX on this date only. Correct now. Just try to understand. So there are two date of acquisition. The two SONA, two AOP, everything will be 2. Good will be 2. So all thing we do 2 calculation यहाँ पर. The following balance stored in the books of MX NX. You can see reserve and return earning. Opening balance has been given. Yes, sir. The business activities of NX Limited are not seasonal in nature. This will assume that profit are earned uniformly throughout the year. This assumption is what general assumption. In all questions, we are assuming this only. The parent company has adopted an accounting policy to measure NCI at fair value, applying Ind AS 103. The fair value is to determine at quoted market price, and the given market price of MX and NX is 120 and 125. It means we need to find out NCI by using fair value method. Prepare consolidated balance sheet. Very simple question without any adjustment. You can see there is no dividend adjustment, there is no fair value adjustment, there is no abnormal loss adjustment, there is no impairment loss adjustment, no adjustment in this question. So whenever they ask chain holding, now they ask plain question. But even though they have given that, the concept remains same. The concept remains same. Correct. Now here the first changes is that we need to find out calculation of NCI. We do calculation of NCI. So MX to very simple. MX, can you say what is the direct holding in LX Limited? Direct holding by LX Limited 85%. Correct. And what is the total 100%? So NCI become 15%. MCI become 15%. Now in NX Limited, can you say LX has some indirect holding? Indirect holding. Now MX has invested how much? 60%, but LX is holding 85% of that investment. So we'll do 85% of 60%. That will become the direct. That will become the indirect investment. In simple word, I will say this way. When we are calculating NCI in MX, it will be 100 minus 85, that is 15. But in NX, it will be 100 minus what? 100 minus what? Can you say 100 minus? So how much LX has invested in MX? Correct now. That is what? That is 85%, so we'll do 85% of what? Of 60%. Understood? So this is the holding of ultimate parent company. Holding of ultimate parent company in what? Subsidiary. So this is coming how much? 60 into 85%, that is coming 51. This is coming 100 minus 51. NCI will become 49%. NCI will become 49%. Got this point? Have you noticed this calculation? This calculation means इसमें हुआ क्या? Just try to LX, MX and NX. LX is holding how much? 85%. And MX is holding what? 60%. Means in NX, how much parent is holding? This LX is holding. That will be 85% of 60%. 85% of 60. Understood? So this will be the holding of LX in NX. So balance will be NCI. Balance will be non-controlling interest. Have you understood this calculation? Batao. NCI calculation. The first adjustment, which is new adjustment, calculation of NCI. Calculation of NCI, have you understood? Done. Now can you say we'll prepare two AOP? One is AOP of MX, one is AOP of NX. Same way AOP will be done as we have done for simple say general question also. You can see reserve and retain earning. So first write down closing balance, opening balance, profit after appropriation. But in this question there is no there is no fair value adjustment. First, we have not done fair value adjustment working out. If suppose fair value information is given, so we'll do fair value adjustment also, as in the same way as we have done for general question also. Got this point? Now in this case, you can see there is no dividend paid, there is no abnormal loss, there is no bonus here. So directly this will be what? The total profit, and this will be allocated to pre and post acquisition profit. But for MX, can I say there is entire profit is post acquisition profit, because the date of acquisition is the beginning of the year only. So this entire profit is what? Post acquisition profit. Now AOP of NX same, closing balance, opening balance, this is profit after appropriation, but there is no adjustment once again. So this is the profit earned by the company. This will be allocated pre and post. Here pre is 6 months and post is 6 months. So we have allocated this profit in pre and post acquisition profit. Chalega? Understood. Now we'll prepare two Sona. Sona will be two. So Sona of MX Limited, you can see date of acquisition, date of consolidation, in post there are reserve and retain earning. And equity share capital, same will come. Reserve, opening balance, post acquisition profit, this will be closing balance. Return earning, this is opening balance, this is post acquisition profit, this is closing balance. This is the total. Total आ गया. Once again, there is no dividend paid, there is no fair value adjustment. So this is the answer. Now Sona of NX Limited, same thing will do. Correct. So you can see equity share capital, closing opening will come. Then reserve, can you say opening balance plus pre-profit will come? Here post acquisition profit will come. So return earning, opening balance plus post pre-acquisition profit will come. This is post acquisition profit will come, and this is total. Now once again, there is no dividend paid, there is no fair value adjustment. अगर वो होता, then same process you will do. Is minus dividend paid, minus plus minus fair value adjustment. Got this point up to this? Any doubt? Is AOP and Sona remain same in chain holding? AOP and Sona remain same in chain holding. Got this point? Have you understood this much? Follow. Understood? Now coming to goodwill or gain on market purchase, यहाँ पर once again two calculation, one is for MX, one is for NX. यहाँ पर there will be some changes. MX will remain same. So MX fair value of consideration paid will come to, this is cost price of investment. Then we'll find out fair value of NCI. This will calculate. Understood? Now in NX, what will be the fair value of consideration paid? This is थोड़ा सा new adjustment. Now just try to understand whatever investment is coming in the books of MX. In that investment is whatever MX is paying to obtain control in NX Limited. You think from parent companies, means from LX point of view, from ultimate parent company point of view. So how much consideration has been paid by MX Limited on behalf of LX Limited? So how much consideration has been paid by MX Limited on behalf of LX Limited? Okay, that will be 85% of total consideration paid. 85% of total consideration paid will be PC from parent company's point of view, from ultimate parent company point of view. Understood? So this will take 85% of the total investment. Total investment. Have you noticed this? This is a new point. This you need to be careful. 85% of total consideration. Follow. Yes, sir. Now we'll find out fair value NCI. So first calculate total number of shares of subsidiary company. The total number of shares will be how much? Let's check it. You can see this is 1600. This is 1600 divided by 100. It is 16. This is 2000 divided by 100. This is 20. So this become total number of shares multiplied by NCI share. Will get the total number of shares held by NCI, then multiply by fair value equity share. That is given in the question, the last para. So that only we have done. You can see the MX 20 lakh na, see, or rupees lakhs, or rupees in lakhs. So this become 20 lakh shares multiplied by NCI percentage 15%, and the fair value is given in the last para of the question 120. So this becomes fair value of NCI. Similarly, 16 lakh shares into 49%, this we have calculated in working note number 1 into 125. This is given in the last para of the question. This becomes NCI. From this minus fair value of INA as calculated in SONA on the date of acquisition, this will be goodwill or gain on bargain purchase. Because it is coming negative, this is gain on bargain purchase. So this becomes total gain on bargain purchase, which will be transferred to capital reserve. Understood? So have you understood this particular point? Have you understood this point? Follow. Then the last working note will be other equity NCI. Once again, NCI will be 2 for MX and NX both. You can see NCI we have done, MX and NX. Correct. So reserve, return earning, these two figure will come from the balance sheet. This will come from previous working note. Previous working note. Yes, sir. Now can you say we'll do share of profit of MX. This will get from SONA of MX. So return earning and reserve. So return earning will be transferred to return earning and NCI. Reserve means as per the holding ratio. The holding ratio is what, 85% and 15%. We have allocated on that ratio. This reserve will be also transferred reserve and what, NCI 85% and 15%. This is in MX column. Samjhe? NCI ka MX column. Now sharing profit of NX. It will be also take the figure post acquisition profit from SONA. We have retained earning and reserve. So retained earning and reserve, it will be transferred to a parent company NCI as per the holding ratio, that is 51% and 49%. 51%. So 51% and 49%. This is also 51%, 49%. There is no other adjustment. There is no URP. There is no impairment loss. There is no, nothing is given. So only this much. This become the total. This become the total. Up to this, any doubt? Only the last adjustment. I said there are 3 new adjustments. One adjustment was NCI calculation. Second adjustment was this, and third adjustment I am informing you. Now just try to understand. We have taken 85% of 1350. So how much we have not taken? 1350 into 15% we have not taken, 202.5. Correct? So we have not considered 202.5. So what ICI is doing, because they have not considered 15% of 1350, they are deducting this from this NCI. So this you deduct from this NCI. They are saying that this NCI is overvalued by this amount. Now, Abhi, right now I will not give you the concept of this, why we are deducting this. Only just memorize this point. I will not give you any concept about this deduction. Only I will say कि देखो, you have considered only 85% of 1350. The balance sheet will not tell you because balance sheet is depend upon double interest system. So you have considered only 85%. So balance sheet will have some difference of 15% of 1350. So that will be deducted from NCI in MX Limited as NCI share in investment in NX Limited, 15% of 1350. This is the third new adjustment, and this will become the total other equity NCI. This will become the total NCI which will come in the balance sheet. This is the entire chain holding. Entire chain holding you have understood. Normally they are asking this type of question. So I have also explained this type of question. There is no other question in ICI study material regarding chain holding. Understood? Correct. Now, what I will do, देखो, I have done the basic from examination point of view. I have done the entire discussion about a consolidation. Now, what you do, you revise by your own. I am giving loss of control. Loss of control. You revise this. Now I can't do much because that will be wastage your time also. To you to by your own. Loss of control. Loss of control. Changes in proportion of NCI. Changes in proportion of NCI. This concept by your own. Then Ind AS triple one that you do by your own, and Ind AS 28 do by your own. So this you do by your own. All thing. Correct? This much you will do by your own. I will do this much only. Correct? Understood? Have you understood this much? Follow. So all other concept, whatever is left. And control definition, if you want to revise control definition also. Because from control definition, M2 question can be asked. Correct. So this much, these are the concept left. Changes in proportion of NCI is further acquisition or disposal of share without loss of control. Correct. Then loss of control do by your own. This one question is given in my expected question that you do by your own. Ind AS triple one do by your own. Ind AS 28 do by your own. So can you do this much by your own? Or you want my help? I will say do by your own because now business combination I will do. Business combination will do after break. Correct now. So when I'll come for business combination, if you have any doubt about this, you ask me. I will give you 1.5 hours for this preparation. 1.5 hour. 1.5 hour will be break. And revise this. Can you do this much? Follow. You want 1 hour break or 1.5 hour break? कंट्रोल डेफिनेशन, चलो कंट्रोल डेफिनेशन कर लेते हैं. This concept you do by your own, okay? I am saying na, loss of control do by your own. Changes in proportion of NCI do by your own. These two concepts you do by your own. Small question can be asked from this topic. Control definition you want me. Control means what? Whenever investor, whenever investor control an investee, an investor control investee, if the investor has three elements. One is power over investee, one is exposure or right to variable return, and third is what? The ability to use the power. From exam point of view, always whenever a question is come for control, always assume this point number 2 and 3 will be satisfied. Correct. Now they will not ask any specific question on this. So if they will ask this, means they want to kill you. Correct. Now, so exposure or right to variable return and the ability to use power, always say that this will be satisfied. Now power over investor means what? The investor has some existing right which gives current ability to direct the relevant activities of the investee. Is we need to find out whether they have a right which gives current ability to direct the relevant activities. Current ability means what? The right can be exercised before, the right can be exercised in general meeting. Whenever general meeting will be held, the right can be exercised or not. Suppose right now they are holding 40% and they have a potential equity, they have a call option to purchase additional 20%. And before meeting, they can exercise this call option. This can I say on AGM, can I say they can exercise 60% voting right. Therefore, it will be known as yes, potential voting right will be considered for determining the power over investee. Why? Because they will give current ability to direct the relevant activities of the investee. Relevant activities means what? Which is the range of operating and financial activities of the investee affect the return of investee, will affect the profit and loss of the investee. However, that is not so important. Current ability, I hope you have understood this point. What do you mean by current ability? Now coming to right. So this right can be of two types. Either it can be protective right or substantive right. The protective right will not be considered to find out power over investor. Protective right is only given to protect the interest of investor. So that will not be considered for determining power over investor. But substantive right will be considered. What do you mean by substantive right? Is there must be practical ability to exercise the right. Normally this right will be identified whenever any investor is holding more than 50% of voting power. But sometimes even though they are holding less than 50%, they may have a practical ability to exercise the right. They may have the practical ability. This situation will means they have a de facto power. So de facto power, correct? De facto power can arise by in three situations. For example, the investor has done one contractual agreement with other boat holder which will give some de facto power. For example, A, B, C, D. A is holding 40%, B is holding 20%, and A has done one agreement with B that on behalf of B, A will vote. So it means they have now de facto power over the investee. Two is what? Widely dispersed holding of other boat holders. Me suppose A is having 40% and other investor is widely spread and they will never participate in general meeting and they have a very small holding. Each holders have very small holding, for example less than 1%, and they will never participate in annual general meeting. It means can I say A will have all the decision making power, so it means they have de facto power. The last one is what? Potential voting right. So that already I have explained. If the potential voting right can be exercised before meeting, so it is known as substantive right, and that will be considered for determination of what? Power over investee. So if the potential voting right, if it is in the money means of course it is favorable, then only it can be exercised. If it can be exercised, if it is favorable, then it will be considered substantive, and that will be considered for determination of what? Power over investee. But if it is deeply out of money, it will never be considered. But if it is out of money, not deeply out of money means unfavorable, but then also can be exercised. If that will give some future economic benefit, then also it can be considered for determination of power over investee if that is substantive. The potential voting right is substantive. Understood? This is the entire discussion. I think you'll be able to answer any question if you have understood this much. Correct? Varsini, what you have written? Sir, can you please try to cover maximum of example question? Example means expected question. Expected question now you do now. How much I will do, Ray? I am also tired now. I am also tired. Just do it. I am saying some question you do. because to listen everything you will not be able to write. Some question you practice, correct now. Some question you practice, if I will do everything you will also die in exam. So you need to also think whether you are able to attempt it by your own or not. So do it some question by your own, correct now. Got this point? So we'll take 1 hour break, and after break we'll do business combination. Business combination we'll do the special point. Got this point? Means I have done the, normally they will ask 14 mark question from consolidated balance sheet. They ask a small question, that must you can do by your own na. Chalega? Yes sir. Yes sir. We'll have a break. Everyone, once again, welcome the revision class. Have you all joined? Hello. Can we start? Will we start now business combination revision? I hope everyone have understood consolidation, all the adjustment, whatever we have discussed. We have done two questions also, balance question, do by your own. I hope that revision has helped you. Hello. Let us start a quick revision of business combination. Okay. Business combination means whenever a group of assets and liability acquired, then there are 2 points which may happen, that if that meet the definition of business, then whatever you are acquiring that meet the definition of business, then of course it is a business acquisition, and Ind AS 103 will be applicable on the date of acquisition. Correct? Now, whenever does not meet the definition of acquisition, does not meet the definition of business, then this is not a business acquisition, then that will be considered as asset acquisition. Now, accounting treatment of for the accounting treatment of that asset, a group of asset acquisition is not covered under Ind AS 103. However, for that group of asset acquisition, no Ind AS is applicable. Therefore, Ind AS 103 has given guidance for the accounting treatment of such asset acquisition. Now, Ind AS 103 says that in that case, you need to recognize all asset account debit to all liability and to purchase consideration, whatever you have paid. But in this case, whatever purchase consideration you have paid, that will be allocated to all the asset in the ratio of their fair value. Therefore, will not recognize any goodwill, gain or bargain purchase in case of asset acquisition. Correct? Understood? This type of question can be asked in MCQ based question. You just try to understand, whenever you acquire any group of asset and it does not constitute business, then that will be an asset acquisition, not business acquisition. But this point. Now, business combination, this chapter is applicable on the date of acquisition when the control is obtained by the acquirer. So, in this, acquirer obtain control in the business of acquiring. Correct? On the date of acquisition, we apply Ind AS 103. Now, this can be actually by acquiring substantial portion of equity interest of other entity. Then this is nothing but formation of subsidiary, or by acquiring one or more business, yeah, all business of acquiring directly. Correct? Now, so this is also what business combination. Correct? So there can be different form of business combination. For example, it can be formation of subsidiary, it can be amalgamation, absorption, it can be demerger also. Normally, four type of question is covered in our ICS study material. One is formation of subsidiary, then amalgamation, absorption, and demerger. Demerger question also we have. Now, accounting method for business combination, what Ind AS 103 says that for business combination will apply acquisition method in the books of acquirer. In the books of acquirer. However, if the business combination is under common control, the business combination is under common control, then Ind AS 103 will not be applicable. Then we need to apply Appendix C to Ind AS 103. Appendix C to Ind AS 103. One method that is known as pooling of interest method. Therefore, we can say for accounting purpose, business combination of two type: business combination not under common control and business combination under common control. Understood? Now, business combination, when we say only business combination, it means combination not under common control. It can be of two type from accounting point of view. One is reverse acquisition, one is not a reverse acquisition. If it is a reverse acquisition, then legal acquirer and accounting acquirer will be different. Means legal acquirer in that case will not be accounting acquirer. Means whenever legal acquirer and accounting acquirer are same, then it is known as what? Not a reverse acquisition. Then we call it is a simple acquisition. Yes, sir. Yes, sir. This much you have understood. Now, acquisition method. Let us first understand what will we do acquisition method. So normally, whenever they ask acquisition method, which is not a reverse acquisition, two type of questions are very popular from examination point of view. Either they will give a formation of subsidiary question, or they will give you the question of absorption. They will give you the question of absorption. Understood? In this case, first step, what you'll do, you'll do calculation of PC. Calculation of PC means what? How to calculate PC? So first you write on cash payment, then fair value of equity share issued. Fair value of equity shares issued means what? Number of equity shares acquired multiplied by swap ratio multiplied by fair value of equity shares of acquirer company. Fair value of equity shares of acquirer company means this bracket wala is nothing but number of equity shares issued by acquirer to acquiree multiplied by fair value of equity shares of acquirer company. Correct? Then we'll also add fair value of any deferred consideration. Suppose any payment is done after some time, so we need to calculate present value of that deferred consideration. That will be also added to the PC. If there is some contingent consideration, then fair value of contingent consideration will be also added on the date of acquisition. Contingent consideration fair value will be given the question, so that will be also added to the purchase consideration calculation. Now this contingent consideration can be either classified as financial liability or can be classified as equity depending upon the nature of settlement. If that is to be settled by cash or by issue of variable number of equity shares, then it will be classified as financial liability. Otherwise, if it is to be settled in the fixed number of entities own equity shares, then it will be classified as what? It will be classified as equity. I hope this you are understanding and whatever I am saying. Correct? Whenever that contingent consideration to be settled in cash or by issue of equity shares, which will be variable number of equity shares, that will be classified as financial liability. And if it is to be settled by fixed number of equity shares, then it will be classified as what? Equity. Correct? Now then in this we'll also add fair value of replaced SBP award. Fair value of replaced SBP award. Sometime what happen, SBP award of acquiree will be replaced by the SBP award of acquirer. In that case, the amount attributable to pre-combination period will be added to PC. So how to calculate the amount attributable to pre-combination period, that we need to understand. So this will be calculated by using this formula. What is the formula? Fair value of original SBP award. This will be given the question, multiplied by expired vesting period divided by original vesting period or replaced vesting period, whichever is greater. So all information will be given, only to calculate the amount. What is the formula? Can you repeat with me? Fair value of original award of acquiree multiplied by expired period divided by greater of original vesting period or replaced vesting period, whichever is greater. Understood? So this will be the total purchase consideration. From this we'll do some adjustment of a separate transaction which is not a part of business combination transaction. For example, suppose you have paid 100 lakh, but out of this some amount you have paid for some pre-combination relationship, not a part of business combination transaction, that amount whatever you are paying, that should be adjusted and that will not be considered as piece for business combination. Whatever extra amount you are paying or you are receiving, correct, now means any amount payable or receivable for pre-combination period or post-combination period, that should be adjusted from this and that will not be a part of business combination transaction, so that will not be considered in PC calculation. So after that adjustment, whatever is left, that is known as for business combination. For this, normally till now they have not given any question of this nature. So I hope till now they have not given this type of question in exam or ICS study material. However, any direct cost related to acquisition will not be included in PC, that will be charged to profit and loss account. Any cost of issuing equity shares or any other securities will be also not included in PC, that will be accounted as per the requirement of Ind AS 32 or Ind AS 109. Correct? Now any expenses of acquiring paid or reimbursed by acquirer will be also not included in PC, that will be also charged to profit and loss account. Correct? Now this is very important. Any payment to employee shareholders, suppose any payment has been done to employee shareholders who is also the employee of the company, then one doubt will come whether whatever you have done payment, that is a part of PC or that is not a part of PC. But Ind AS 103 says that if the payment done to the employee shareholder is fixed, then that will be included in PC. But if that is contingent and that contingent payment cannot be forfeited, even though employee terminated, then that will be a part of PC. But if it can be forfeited, if the employee terminated, then it is not a part of PC, then it will be considered as payment in the capacity of employee, which will be accounted as per respective Ind AS. So in these two cases it will be included in PC, in this case it will not be included in PC. Understood this point? Chalega? Yes sir. This become calculation of PC. Now second working note will be calculation of fair value of INA on the date of acquisition. In this calculation we'll also consider the calculation also, as we have done in consolidation chapter. So in this case we'll write down the fair value of assets and liability, fair value of assets and liability on the date of acquisition. If the fair value information is not given, then always we'll assume that it is equal to carrying amount of INA of acquiring company, correct? Then we'll also write down tax base of assets and liability. Tax base information will be given the question. If not given the question, we'll assume that it is equal to the carrying amount of INA of subsidiaries. Understood whatever I'm saying? The fair value information is given. If not given, consider it as carrying amount of INA. Tax base information is given, thank you very much. If not given, then it will be equal to the carrying amount of INA of acquiring. Then find out INA, the total asset minus liability, correct? Now this is this minus this will be the temporary difference. If the fair value is more than tax base, then we call it taxable temporary difference, and if the fair value is less than tax base, we call it deductible temporary difference. So if there is a taxable temporary difference, we create DTL on this. If there is a deductible temporary difference, we create DTA on this. I hope you are understanding all this point. Now we'll calculate DT or DTL as per the taxable deductible temporary difference. DTL minus DTL from this, DTA then plus DTA in this, correct? Now after DT calculation, this will become fair value of INA on the date of acquisition. Understood this point? Have you understood this point? Bolo fast. Correct. Now INA will be based on some INA, some special point is there. So INA, what Ind AS 103 say that if there is a contingent liability of acquiring, there is a contingent liability of acquiring, that will be also recognized in the balance sheet of acquirer on the date of acquisition at fair value. So any contingent liability will be recognized as provision if the fair value is given in the question. If fair value is given in the question, then contingent liability of acquiring will be recognized as provision on the date of acquisition if the fair value is given in the question. Understood this point? Non-current asset classified as held for sale of acquiring will be recognized on the date of acquisition in the books of acquirer, but as per Ind AS 105, it will not be recognized at fair value. It will be recognized at carrying amount or fair value less cost of disposal, whichever is lower. Carrying amount of fair value less cost of disposal, whichever is lower. Understood this point? Correct? Yes, sir. Cash and cash equivalent in functional currency is sometimes they will give you fair value of cash and cash equivalent. That is bakwas information. That is bakwas information. वो धोखा दे रहा है. That is only trying to confuse you. Can say carrying cash and cash equivalent will be always taken at carrying amount, not at fair value. So be careful about this point. Indemnification asset. What do you mean by indemnification asset? Sometime acquiree agree to indemnify for the contingent liability assumed by the acquirer. In this case, a indemnification asset will be recognized in the books of acquirer on the date of acquisition at fair value given in the question. But you should be always careful that fair value of indemnification assets never exceed the fair value of liability assumed. Correct? Now, means either equal to the fair value of liability assumed, or it will be less than the fair value of liability assumed. It cannot be more than the fair value of liability assumed, but it will be recognized at fair value. However, it should not exceed the fair value of liability assumed. Then in-house research and development project. Now, any in-house research and development project which was not recognized in the books of acquiring as per Ind AS 38 can be recognized in the books of acquirer on the date of acquisition, because it will be the definition of intangible asset. It will be recognized in the books of acquirer on the date of acquisition at fair value. At fair value. So will meet the definition of intangible asset, will be recognized at fair value even though not recognized in the books of acquiring. Correct. However, subsequent accounting will be done as per Ind AS 38. Ind AS 38. Subsequent accounting will be done as per Ind AS 38, but any in-house research and development on the date of acquisition can be recognized at fair value. Correct. Then reacquired right. Suppose any right which was given earlier now has been reacquired. So that reacquired right will be recognized as an intangible asset at fair value on the date of acquisition. Will be recognized in the books of acquirer on the date of acquisition at fair value. So any reacquired right will be recognized in the books of acquirer on the date of acquisition at fair value. In this case, we need to also calculate gain or loss on settlement of that reacquired right, on cancellation of that right. So we need to also calculate gain or loss on settlement. Correct now. So how to calculate gain or loss on settlement? Correct now. That we need to understand. So it will be lower of A and B. It will be lower of A and B. lower will be, A will be what? Fair value of such right minus carrying amount of such right in the books of acquiry. So this will be given, fair value will be given, carrying amount will be also given. You can find out A. And second, B will be settlement price paid. So whenever you have given that right, that time there was some agreement that this much compensation you will pay, that becomes settlement price paid. So whatever settlement price paid, that will be also given the question. Correct? Now whichever is lower, that will be gain or loss on cancellation. If the lower is coming as positive amount, then that will be loss. If the lower is coming as a negative amount, then that will be gain. Now it can be negative if the fair value is less than carrying amount. It can be negative if the fair value is less than carrying amount. Understood? So gain or loss on settlement will be calculated. Gain or loss on settlement will be calculated, and it will be considered as a separate transaction which is not a part of business combination transaction. Therefore it will be adjusted with the calculation of PC. Understood this point? So reacquired right, till now they have not asked any question on this, can be asked in exam. Whenever reacquired right is given the question, it will be recognized in the books of acquirer at fair value. Second, you need to calculate gain or loss on settlement. How to calculate that? You need to find out lower of A and B. A is what? Fair value minus carrying amount. B is what? Settlement price paid. Everything will be given the question. If the lower is positive amount, that will become loss on settlement. If the lower is negative amount, that will become gain on settlement. This gain or loss will be adjusted with the amount of PC whatever you have calculated in working note number 1. So PC whatever you have calculated, in this you will do minus loss on cancellation. If there is a gain, you will do plus gain on cancellation. So this will become PC for business combination. This will become PC for business combination. Understood? Reacquired right? Yes sir. Chalega. Then assembled skilled workforce. Assembled skilled workforce will never be recognized as an intangible asset in the books of acquirer on the date of acquisition, as it will not meet the definition of intangible asset. So will not be recognized, recognized even though some fair value has been given. Ignore that for recognition purpose. Correct? Then customer and subscription leaves will be recognized in the books of acquirer on the date of acquisition at fair value, because this will meet the definition of intangible asset. Chalega? Yes sir. Please, it is important, can be asked in exam. To lease, there can be two situations. If the acquirer is a lessee, correct now. So what Ind AS 116 that if the lease is a short term lease or lease of low value asset on the date of acquisition. So if that is a short term lease on the date of acquisition or lease of low value asset, then will not recognize ROU asset and lease liability on the date of acquisition. So there is no need to recognize any ROU asset and lease liability on the date of acquisition. But if it is not a short term lease or lease of low value asset, then we recognize lease liability, which will be equal to present value of remaining lease payment discounted by using the rate of discount whatever given in the question. So recognize lease liability, which will be equal to present value of remaining lease payment on the date of acquisition, and ROU asset will be equal to lease liability. These both will be recognized at same amount. Understood this point? Till now this point has been not given in the question, can be given in the question. To recognize ROU asset and lease liability at present value of remaining lease payment on the date of acquisition by using the discount rate whatever given in the question. Chalega? Yes sir. However, if the acquiry is a lesser, then in the books of lesser it can be either operating lease or finance lease. If it is an operating lease, then of course underlying asset is coming in the balance sheet of acquiry, that will be recognized at fair value. But if it is classified as financial liability, then when lease receivable is coming in the books of acquiry, that will be recognized in the books of acquirer at present value of remaining lease payment discounted present value of remaining lease payment on the date of acquisition discounted as per the rate of discount given in the question. However, this is not important from examination point of view. They will ask this where acquiry is a lessee. Have you understood this much? Have you understood? Correct. Then third step will be measurement of NCI. Measurement of NCI, whatever we have done in consolidation chapter, same thing we applicable. Fair value method or proportionate share in INA method. I hope this too you know. I think in this no discussion required. Then last step will be goodwill. Again on bargain purchase, the same formula. Formula is PC plus fair value of previously held equity interest in case of step acquisition plus NCI. From this minus karo fair value of INA on the date of acquisition. The difference will be goodwill or gain on bargain purchase. Understood this much? Have you understood? Correct. Then If there is a step acquisition, of course you need to calculate remeasurement gain and loss as we have done in consolidation chapter. The fair value minus carrying amount on the date of acquisition, the difference will be what? Remeasurement gain and loss. It can be transferred to PL or OCA as the case may be. However, if question is silent, it will be transferred to PL. Correct. So normally after this we need to pass one journal entry. Journal entry. So normally always think about this journal entry. If you have corrected, if you have already thought about this journal entry, you will never do mistake. So can you say what will be journal entry? Just try to understand. Just try to understand. What we'll do? Asset will come at fair value. All asset will come at fair value. Correct. Non-current asset held for sale, if any, will come at carrying amount of fair value less cost of disposal, whichever is lower. Indemnification asset will come at fair value, provided it should not exceed the fair value of liability assumed. In-house research and development will come at fair value. Customer risk will come at fair value. Cash and cash equivalent will come at carrying amount. Correct. Now, reacquired right will come at fair value. Reacquired right will come at fair value. ROU asset will come at present value of remaining lease payment. ROU asset will come at present value of remaining lease payment. Correct. DTA will be as per working note. DTA will be as per working note. Goodwill will be as per working note. Whatever you have calculated, that will come. Remeasurement loss will be as per working note. 2. Liability at fair value. Liability will come at fair value. 2. Provision will come at fair value. 2. TTL as per working note. TTA will come as per working note. Gain on bargain purchase will come as per working note. Correct now. Then investment in previously held equity interest. Investment in previously held equity interest will come at carrying amount. When you are writing remeasurement gain or loss separately in this balance sheet, the investment will be cancelled at carrying amount. Investment will cancel at carrying amount, and remeasurement gain, if any, will come as working note. I hope you are understanding this journal entry. Then whatever you are writing, that is the PC. So in PC, whatever you are writing, can I say PC, cash and bank will come. Equity share capital issued will come at nominal value. Securities premium will come at a price over and above nominal value. Deferred liability will come. Contingent consideration will come, and for replace SB award, whatever you have included that amount in PC, that will be recognized as SBP reserve. If you have understood journal entry, it will help you to prepare the balance sheet after business combination. Understood? So this is one particular case. Can we take one question based on this? Fatafat. Let me take one good question. Can be asked in exam. I'm taking a good question. चलेगा? Come to this question. One minute. So I'll take from my book. I'm taking a good question from the question already asked in exam. It is a good question. The draft balance of Swan Limited and Direct Limited as on 31st March 2003 is as under. You can see they have given non-current asset PP, investment, inventory, financial asset, all other asset, equity and liability. Now read the question. Share capital of Swan Limited is of rupees 10 each. and Duck Limited is of rupees 100 each. So read the question carefully. Read the question carefully. Chalega. Now, on 1st April 2003, Swan Limited acquired 80% equity shares of Duck Limited. It is a question of formation of subsidiary. Swan Limited agreed to pay its shareholders of Duck Limited rupees 20 per equity share in cash. बोला cash payment is 20 per equity share in cash, and to issue 5 equity shares of rupees 10 each of Swan Limited in lieu of every 6 shares held by the shareholders of Duck Limited. Is 5/6 is the swap ratio. The fair value of shares of Swan Limited was rupees 100 per share on the date of acquisition. Fair value is what? 100 rupees. Yes, sir. Swan Limited also agreed to pay an additional consideration being the higher of rupees 90 lakh and 30% of any excess of profit in the first year. They are saying we'll pay you additional consideration which will be equal to higher of 90 lakh or 30% of surplus profit. 30% of any surplus profit in the first year after acquisition. Correct. Now over Duck Limited profit in the preceding 12 months. Correct. Now additional amount will be due in 3 years post the date of acquisition. Additional amount will be due after how many years? 3 years. So this payment will be done after 3 years. Duck Limited earned 30 lakh profit in their preceding year. They have earned 30 lakh profit and expect to earn 40 lakh in the financial year, and they are expecting that they will earn 40 lakh in the next financial year. Correct. Now so what will be the excess profit? 40 minus 30. So 40 minus 30, and the 30% of that is only 3 lakh, which is not more than what? 90 lakh. It means, can I say there are two elements in this. Just trying to understand. In any case they need to pay 90 lakh, and they in any case they are supposed to pay 90 lakh. So that this 90 lakh is a deferred consideration, but it is quite possible that they are supposed to pay more than 90 lakh. If 30% of excess profit is more than 90 lakh, that become contingent consideration. But can the probability of that contingent consideration very low, and therefore the fair value of that contingent consideration has not been given in this question. Therefore that need to be ignored. Only you need to find out the fair value of deferred consideration, that will be calculated by using the present value concept. Got this point? Yes, sir. Now fair value exercise resulted in the following. Fair value of property, plant and equipment and investment of Duck Limited is given 1200 lakh and 300 lakh. Duck Limited own a popular brand name that meet the recognition criteria for intangible asset under Ind AS 103. Independent valuer had attributed a fair value of 240 lakh. Correct. Now so their fair value of brand has been given. The brand will be recognized even though it was not recognized in the books of acquiry. However, the brand does not have any cost for the tax purpose and no tax deduction are available for the same. So what they are saying, this brand is not deductible for tax purpose. Correct. Now it means, can I say this information has been given to find out tax base. So tax base of the brand is equal to 0. Correct. Then they are given two contingent liability of Duck Limited. Loss sheet filled by the customer. Fair value is given. So whenever fair value is given, recognize this contingent liability as provision. There is no need to read any other point. So this will be recognized at 5 lakh and this will be recognized at 20 lakh. Correct. But what they have given is probable that the outflow of resource embodying economic benefit will be required. It is not probable. So they are saying outflow of resource is not required. Outflow of resource required to settle the obligation is not probable. To apply Ind AS 37, then can I say because of this condition we can't recognize provision, but Ind AS 103 says we can recognize provision. Know the fair value of that provision amount. So this para is not relevant. However, they have given any amount which will be paid in respect of lawsuit will be tax deductible. So can you say amount under income tax is paid whenever it is paid, therefore the tax base become 0. The tax base of this amount become 0. Understood? What is point? And similarly, they have given income tax demand. They have given it is not probable that outflow of resource will be required to settle the obligation. Once again, this point is not bakwas, but for this tax base is not given. This information about tax base is not given. So can you see income tax demand is an item of permanent disallowance. Whenever there is an item of permanent disallowance, the tax base will be always equal to carrying amount. The carrying amount will be the initial carrying amount will be 20 lakh. So tax base will be also 20 lakh. But is fine. Duck Limited has certain equity settled SBB payment award which were replaced by the new award issued by Swan Limited. As per the terms of original award, the vesting period was 5 years. The original vesting period was 5 years, and this is replaced by this. What will be replaced by acquirer award? And as of the acquisition date, employee of Duck Limited have already served 2 years. What is the expired period? 2 years. As per the new award, the vesting period has been reduced by 1 year. That is 1 year from acquisition date. So 1 year from acquisition date. What is the remaining vesting period? 3 years, and that is reduced by 1 year. Means remaining vesting period as per replace award become 2 year. 2 year expired, 2 year left. So it become 4 year. Means replace vesting period is what? 4 year. Correct. Now they have given the fair value by award on acquisition date. Original award 12 lakh, new award 80 lakh. So 18 lakh. What is the formula to find out amount included in PC? We'll take original award multiplied by expired period 2 divided by original vesting period or replaced vesting period, whichever is greater. So 5 or 4, whichever is higher. So 5 will take. So this will come 4.8. 4.8. This amount will be included in PC. Understood? Got this point? Have you understood this point? Yes, sir. Further, Swan Limited has also agreed to pay one of the founder shareholders of Duck Limited sum of 15 lakh, provided he stay with the company for 2 years. This amount can be forfeited if the shareholders is not with the company. Means this is the capacity of shareholders. Therefore, this will not be included in the amount of PC. Therefore, this will not be included in the amount of PC. The acquisition cost of Swan Limited was 26 lakh. This acquisition cost will be charged to profit and loss account as an expense immediately. Therefore, this will be adjusted with the retained earning. Correct now. Got this point? The applicable tax rate is 30%. This is for deferred tax calculation. Assume 10% discount rate. This is for deferred consideration. Also assume, unless stated otherwise, all items have a fair value and tax base equal to the carrying amount of acquisition rate. Even not given, we'll assume this only. Chalega. And you are required to prepare opening consolidated balance sheet. Chalega. Now let us do. Can we do? Okay, first we'll do calculation of PC. Calculation of PC. PC will be what? So PC will be what? करने का जरूरत नहीं. How many shares? Total number of shares given? 7,50,000. Out of that, how much acquired? 80% acquired. How many shares is given? Check करेंगे. Is given 9 lakh. अरे क्या? 9 lakh. 9 lakh. This is 900. 900 lakhs. This is 900 lakhs. Divide by 100 to 9 lakhs. What will do? 9 lakh. उसमें से कितना acquire किया? 80%. 80% has been acquired. So can I say 9 lakh into 80% will do? Then what is the swap ratio given? Swap ratio what they have given? Swap ratio what they have given? 2 by is 5 by 6. You will do into 5 by 6. Into 5 by 6. So how many shares will be issued? 9 lakh into 80%. That becomes 7,20,000 shares. Correct? 7.2 into 5 by 6. 80%. So can you see it will be 6 lakh equity shares. So 6 lakh equity shares will be issued and the price is 100. So it means 600 lakh to 600 lakh will be the amount of fair value of equity shares issued. Correct. Then cash payment has been done. So cash payment will be 9 lakh. They have acquired 80%. This much shares have been acquired and for each shares acquired, they are paying how much cash? 20 rupees per share. So 20 rupees per share. How much is coming? 9 lakh into 80% into 20. That is coming 144. So 144 will come. Correct. Then deferred consideration will come to 90 lakh. You need to find out present value factor at the rate of 10% for how many year? For how many year? 3 years. So 1.10 divide equal to multiplied by 90 lakh you will do. So that is coming 67.62. It is coming 67.62. Contingent consideration fair value has not been given. Ignore. Then we'll find out or replace SBP award that already we calculated 4.8. So this become the purchase consideration. Working note number 1 done. Working note number 1 done. Now working note number 2 will find out the fair value of INA and deferred tax calculation. Correct now. So fair value of INA and deferred tax calculation. I will say you can do together. You can do together. However, they have done separately. Chalega. Understood what I am saying? You can write down fair value of all asset and liability. Then tax base of all assets and liability. Correct. The difference will be the the difference you can calculate, that will be the taxable temporary difference. That will be the taxable temporary difference. You want me to calculate, or you can do from this? Follow. If they have done some other format, you can use that format. Is what format I am saying? Is write down. Write down. You can write down in this way: fair value of all asset minus fair value of all liability, tax base of all asset minus tax base of all liability. The difference will be fair value and tax base. Uska difference लो, that is taxable deductible. Calculate DT and DTL accordingly. This you can do it. You can do it. Correct. Be careful. यहाँ पर there are two provision given. One brand is given which was not recognized in the books of acquiring company. The brand will also come, provision will also come. Be careful about that point. Be careful about that point. Of course, you can calculate this. Follow. You want me to calculate? You can calculate. Follow. Are you able to understand what I am saying? You want me to calculate? You can calculate by your own. No need. Have you understood? Then you do fair value. Fair value minus this is done. You calculate deferred tax. Yes, sir. Now we'll calculate goodwill or gain or bargain purchase. Goodwill or gain or bargain purchase. We'll apply the formula. Formula is what? Fair the PC. PC is how much? 816 already calculated. Right. NCI will be 20% because they have asked you to which method they have asked you to nothing has been given, so that will be we'll use proportionate share in INA method. INA already calculated 1653. We'll calculate 20% of this, so that will be what? NCI. From this total we'll deduct what? Fair value of INA. This is fair value of INA, so this will be the goodwill or gain or bargain purchase. So in this, because fair value of INA is more than total PC, therefore this is capitalism is gain on bargain purchase, which will be transferred to the balance sheet, and then you can do the balance sheet. Now prepare the balance sheet. Correct. Super easy. This type of question only few working note is required. Few working note is required, and then prepare the balance sheet. Understood? Balance sheet. Be careful. Balance sheet. What you write now? Book value of which company? Is book value of which company? Acquirer. And write down fair value of which company? Acquiree. This way you prepare the balance sheet. In this way you can prepare the balance sheet. Be careful about the retained earning. You can prepare one more working note of retained earning. Here there is some acquisition cost. That acquisition cost will be charged to retained earning directly. Correct now. The acquisition cost will be transferred to what? Retained earning. The retained earning will be reduced by the acquisition cost. But this, any doubt? Any doubt? This type of question can be done. Now, second question, which is second concept of this particular chapter, is reverse acquisition. I will take one question of reverse acquisition also. Reverse acquisition. Whenever there is a question of reverse acquisition, first you need to identify the accounting acquirer. Identify the accounting acquirer. Correct now. So normally we find out the number of shares after business combination for acquiree and acquirer. Correct now. Means for legal acquiree and legal acquirer. The owner who is holding largest portion of voting right will be considered as accounting acquirer. Normally in case of reverse acquisition, accounting acquirer and legal acquirer will be different. Therefore it will be a reverse acquisition. So whenever it is a reverse acquisition, first step is what? Identify accounting acquirer. Second step will be calculation of effective PC. Calculation of effective PC. Effective PC, first will find out number of effective shares that would be issued by the accounting acquirer if they legally acquire accounting acquiree. So it will be a deemed PC. Deemed PC. This will do number of shares of accounting acquiree multiply by fair value of shares of accounting acquiree divided by the fair value of shares of accounting acquirer. So this will get a number of effective number of shares. This effective number of shares will multiply by the fair value of shares of accounting acquirer. So you can see number of effective number of shares multiplied by fair value of equity shares of accounting acquirer. This will be the effective PC. Effective PC. Once you have calculated effective PC, then calculate goodwill or gain on bargain purchase by using the same formula. Fair value of effective PC minus fair value of INA of accounting acquiry. This will be goodwill or gain on bargain purchase. Correct now. Now, whenever there is a balance sheet, so balance sheet you will prepare in the books of balance sheet of legal acquirer, but you are preparing from the point of view accounting acquirer. So you will do balance sheet of legal acquirer, but from the point of view of accounting acquirer. Correct. So can you say in this accounting acquirer and accounting acquiry and total, all the PP etc. PP or other asset of accounting acquirer will come at carrying amount, but PP etc. of accounting acquiry will come at fair value. However, goodwill will be the balancing figure. Goodwill as a working note. Correct. Similarly, all the liability of accounting acquirer at carrying amount. Liability of accounting acquirer at carrying amount. Correct. But liability of accounting acquiry will come at fair value. Correct. Equity share capital. This will be carrying amount. Accounting acquirer. And reserve and surplus means other equity of accounting acquirer at carrying amount. However, can you say reserve and surplus of accounting acquiry will not come? This will be nil unless there is a gain on bargain purchase, because gain on bargain purchase will come at capital reserve. But any other equity of accounting acquiry will not be incorporated. Understood? PC equity share capital will be increased by the amount of PC. Will be increased by the amount of PC. Understood? Any doubt? So this is what one question. Let me take one question of what reverse acquisition, which can be asked in exam. Can be asked in exam. I'm taking a good question. This is one question of AX and BX Limited. Question number 7. AX and BX Limited amalgamated on and from 1st Jan 2002. A new company ABX Limited was formed. Similar question is already asked in exam. You can see ABX issued requisite number of shares to discharge the claim of equity shareholders of transfer company. Requisite means what? Minimum number of shares. Is unnecessary. Don't issue higher number of shares. So we'll only issue required number of shares. So whenever there is a requisite number of shares, now they will not give you the fair value of equity shares. They will not give you the fair value of equity shares in that case. Prepare notes showing piece and discharge thereof and draft the balance sheet of ABX Limited. Assuming both the entities are under common control. This is a separate point. I mean, right now we are not doing business combination under common control. We are doing point number B. Assuming BX is a larger entity and their management will take the control of the entity. Out of AX and BX will be accounting acquirer and AX will be accounting acquirer. So this become a reverse acquisition. This become a reverse acquisition. Amalgamation question will be always reverse acquisition. Amalgamation question, if it is not a business combination under common control, it will be always a reverse acquisition, because a new company cannot acquire an old company. So out of legal acquiry, one will be accounting acquirer, one will be accounting acquiry. Then they have given the fair value information. Fair value of fixed asset means property, plant and equipment, inventory, and fair value business. Whenever they say fair value business, this means always including goodwill. Including goodwill. So fair value of business means including goodwill, but to find out goodwill and capital reserve, we want fair value of INA, that is excluding goodwill. Correct now. So when we say INA means excluding goodwill. When we say fair value business, yeah, fair value of entity, it means including goodwill. Chalega? Yes, sir. Now, in this second case, how to do? First, we need to identify the who is acquirer, who is accounting acquirer. So it is given in the question. BX is a larger entity, and their management will take the control of entity of ABX Limited. So of course it is only accounting acquirer. Then also we need to find out how many, what is the voting right of owner of AX Limited and owner of BX Limited. So first we'll find out AX, BX. So this is the fair value of business. Fair value of business. Correct now. Then we'll divide by value of shares of ABX Limited. This is ABX Limited. Is issue price of ABX Limited. That is not given in the question. So therefore we have divided, assume issue price equal to face value. Price is equal to face value, and therefore we divided by 10. So this is the number of shares which will be issued by the ABX Limited the honor of AX and BX Limited based on the issue price. This is the assumption we have taken, that issue price is 10 rupees. Correct. Now, if this is the number of shares, then can you say in the combined entity, AX will hold 44% of voting right and BX will hold 56% of voting right. So honor of BX Limited is getting largest portion of voting right. Therefore, BX Limited is the accounting acquirer and AX Limited is an accounting acquiree. Correct this much. Now we'll do calculation of PC. Note easy case of reverse acquisition. Now we'll do calculation of PC. Calculation of PC. Just try to understand. Everyone, BX, AX. CX it is 56%, AX it is 44%. Now we need to only issue requisite number of shares, required number of shares. So the BX Limited is having how many shares right now? So BX Limited, in the balance sheet of BX Limited, how many shares we have? If you see the balance sheet of BX Limited, it is how many shares? It is shares 7,000 divided by 10 is 700 shares. It means, can I say BX Limited is holding 700 shares for how many voting right? For 56 voting right. So how many shares will be effectively issued to AX Limited owner to get 44% voting right? So what we'll do? 700 divided by 56 into 44. How much coming? So 700 divided by 56 into 44. It is coming 550. It means 550 become the effective number of shares to be issued to the owner of AX Limited, and 550 into what is the fair value of shares. Now we need to find out what is the fair value of shares of BX Limited. What is the fair value of shares of BX Limited? That is not given, but can fair value of business given. So fair value of business of BX Limited given how much? It is given 14,000. And what is the number of shares? 700. So can you say divide by this? So this becomes the fair value of shares. So multiply by 20. So what is the purchase consideration? Purchase consideration become 11,000. So PC become 11,000. Understood? 11,000. Now we can pass one journal entry if they have asked journal entry, or we can prepare the balance sheet. Balance sheet can be prepared. The balance sheet will be very easy in this case. Correct now. But have you understood effective? Now we can calculate goodwill again on bargain purchase. So goodwill will be what? Batao. Yeah. What is the PC? PC is what? 11,000. 11,000. Then we'll do minus fair value of INA. Fair value of INA. Correct. Of which company? AX Limited. That we need to calculate. That is not given the question. Fair value business and fair value of INA is different. Fair value business or fair value of INA is different. So you can see they have given AX and BX fair value. So fixed asset has been given 9,500 and this is given 1,300. Apart from that, all assets and liability will be taken at carrying amount. So you can see fixed asset. This is how much? This is 9,500. And inventory is how much? 1,300. 1,300. Now can I say you can calculate, batao, 9,500 plus 1,050 plus 1,300 plus 1,800 plus 450. This become total asset minus total liability. Total liability minus 3,000 minus 1,000. It become 10,100. So if you minus 10,100 from this, 10,100 from this, so what is goodwill? Goodwill become what? 900. The amount of goodwill is 900. You can see in the balance sheet goodwill is coming 900 as a working note. I hope this also you have understood. Have you understood this point? Follow. Got this point? So balance sheet you can prepare now. In this balance sheet, CX and AX. CX will come at what? Carrying amount. AX will come at what? Fair value. This you need to be careful. All the asset of BX will come at carrying amount. All the asset of AX will come at fair value. Correct now. Equity, can you see equity of BX is how much? Equity of BX is how much? Already we know that point. How much? 7,000. So 7,000, and how many shares have been issued? 500. 550. So 550 into 10 will come where? Here. So this will become into 10 because 20 is the total fair value. Out of that 10 is what? Nominal value, and 10 will be premium. So this will come here. Par. Other equity, can you say other equity? What will come? What is the other equity of BX Limited? Other equity of BX Limited, batao. What is the other equity of BX Limited? So it is 2,700. 2,700 plus nil is other equity of AX will not come. Other equity of AX will not come. It is 2,700 plus, but securities premium will come. So 2,700 plus premium. Premium is 550 into 10. It is 5,500 plus 2007, that will come 8200. Then liability will come bx at carrying amount and ax will come at fair value. However, fair value is not given, we'll take carrying amount only. This will come and the balance will tally, and the balance sheet will tally. Understood? Reverse acquisition also you have understood. One question we have taken for reverse acquisition. Done? Yes, sir. Done? Got this point? Now let's come to next concept. Next concept is what? In this, business combination under common control. Now whenever there is a question of business combination under common control, then we need to apply pooling of interest method. Then we need to apply pooling of interest method. So in that case, all asset, all liability will come at book value. So all asset will come at book value. Asset of which company? Transfer company. Transfer means acquiring. So all asset will come at book value. All liability will come at book value. And the reserve and surplus of transfer company will be also maintained. So all the reserve and surplus of transfer company will be maintained at book value. Correct now. PC will be as usual. Means PC calculate as whatever we have calculated in our first concept, that PC will come. So PC will be calculated as it is working note, as per working note, whatever you have calculated, the difference will be adjusted in capital reserve. Means if the debit balance, that is also capital reserve. If credit balance, that is also capital reserve. This is what pooling of interest method. Super easy. I think no explanation required. So this become business combination under common control. Whenever there is a business combination under common control, apply this journal entry. Got this point? Now BX is an accounting acquirer. Now accounting acquirer, all the assets and liability will come at carrying amount only. Accounting acquirer, all the assets and liability will come at carrying amount. Recognize the assets and liability of accounting acquirer at fair value. Understood? This is the concept that is in Ind AS 103. So in the balance sheet of acquirer, we recognize all assets and liability of accounting acquirer at fair value. Correct now. So all the assets and liability of accounting acquirer will come at carrying amount only. This is the logic is this only. Correct? Yes, Ravindam, you have already given the answer. Got this point? Yes, sir. Yes, sir. Now, can we take one question of pooling of interest matter? Only one question we have, that is also AX BX wala question. The same question they will ask, so they will ask the same question only. Correct now. So already the question we have read AX BX. Now in this assumption number A is what? Assuming both the entities are under common control. Correct now. So this is for different type of solution. Just try to understand. Whenever this type of questions come, is whenever there is a business combination under common control. If the swap ratio or the fair value of shares of a company are given, then PC will be calculated as we have calculated in our previous question, whatever. Then the fair value of equity shares issued will be the number of shares of transfer company multiplied by swap ratio multiplied by the fair value of equity shares of transfer company, as we have done in previous question. But if the swap ratio of fair value of shares of the company are not given or require to calculate requisite number of shares, then we'll do in this way. What is the way? First we'll find out a book value of the net asset of transfer company. In this question, can I say AX and BX both are transfer company? So can you give me the net asset of the both the company? What is the net asset? It is total asset is this 13,050 minus liability is what? 4,000 minus 4,000. It is coming 9,050. AX is coming 9,050 and BX is coming how much bata? BX. BX is coming how much bata? BX. BX become total is 15,200 minus what? 5,500. So BX is coming 9,700. BX is 9,700. Total become how much? That's 9,050. Total become 18,750. Okay, this become the total net book value of net asset of accounting, book value of net asset of transfer company, because AX and BX both are transfer company in this case. Correct now. From this will minus reserve to maintain, because reserve and surplus to be maintained. So this become total equity. Asset minus liability is total equity. From this will deduct reserve and surplus to maintain. So what is the reserve and surplus given in the balance sheet? check करो. Reserve and surplus given in the balance sheet is how much? Other equity. This is 3050 plus 2700. It is coming 5750. तो 5750 minus कर देंगे. Correct ना? This will come 13,000. Total will be 13,000. So this is the total equity required. Total equity required. Now from this, to find out number of equity shares to be issued, number of equity shares to be issued to the owner of AX MBS will divide by the issue price of transferring company. Issue price of transferring company. But issue price of transferring company is not given in the question. Always divide by issue price. But in this case, issue price is not given. So divide by face value, and face value is also not given in the question. So they have assumed that face value of ABX Limited is 10. So we will divide by 10. It will be 1300 equity shares. 1300 equity shares. Now these 1300 equity shares will be allocated to the owner of AX and BX in the ratio of book value of the net asset, of both the company. Is this 1300 will be allocated in this ratio. This 1300 will be allocated in this ratio. Understood? Understood. However, from my point of view, this should be allocated in the fair value of net asset. But ICI is allocating in the ratio of carrying amount of net asset. So we'll also do in the ratio of carrying amount of net asset. So this 1300 will be allocated in the ratio of 9050 and 9700. We can allocate, so about 1300 into 9050 divided by 18750. How much it is coming? It's coming 579. 579 to AX minus 1300. It is coming 721 for BX. So this will be the number of shares. Now once this done, then we can pass the journal entry. So all asset will come at book value, all liability will come at book value, reserve and surplus will be maintained, and equity share capital will be 13,000. So the balance it will tally. Balance it will be as it is, whatever is given the question. Only plus कर देना. This is what business combination under common control. Only one question has been given. That also I have done. चलेगा? Yes sir. The next concept is demerger. Next concept is demerger. Now demerger means what? Whenever demerger, how to identify it is a question of demerger. Whenever there is one company which have two business, suppose B1 and B2, and this one business has been taken over by a new company, and the PC will be discharged by this new company, the shareholders of demerged company. It is a concept of demerger. Whenever PC discharged the shareholders of demerged company, then it is known as demerger. It is known as demerger. Correct now. So normally this type of question may be asked. However, two question has been given. Two question of this nature has been given. Now this demerger can be of two type. It can be either under common control. It can be not under common control. Common control. Then of course we need to apply Appendix C to Ind AS 1. We need to apply what? Acquisition method, that is Ind AS 103. Correct now. Now whatever two question has been given in ICS study matter, in both case they have applied business combination under common control. Business combination under common control means the question of demerger which is not under common control, that is not given in ICS study matter. But we'll do both the point. The demerger is under common control. So what journal entry will do in the books of demerged company? Demerged company means transfer a company. Means who is transferring business to a new company. This 1300 has been allocated in the ratio of what? They are carrying amount of net asset. AX is what? 9050, and this is what? 9700. Total is what? 18,750. This ratio. I have done wrong calculation. 1300 into 950 divided by 18,000. अच्छा, this is not correct. My mistake. 1300 into कितना आ रहा है? You only see ना. I have done fast too. I have done mistake. 9050. 1300 90,000. It is coming 627 and minus coming 670. Now it is correct. Now it is correct. Okay, sir. Now it is correct. Yes, sir, correct. Okay, thank you very much for rectifying me. Now demerger, have you understood what is demerger? So if demerger is under common control, so what will be journal entry in the books of demerged company? Demerged company means transfer a company who is transferring the business to the resultant company, means to the transferee company. Chalega? Transferee company means accounting acquirer. So in this, liability will be debited, liability will be de-recognized at book value. Asset will be also de-recognized at book value. But nothing is receivable from resultant company because PC charged to the shareholders of the company. Therefore, nothing is receivable. So any difference in this journal entry will be transferred to capital reserve. So liability account debit at book value, asset account credit at book value. Any difference in this journal entry will be transferred to capital reserve. Correct? Only one journal entry. Now in the books of resultant company means in the books of transfer company, because we are applying appendix C to AS 103, appendix C to AS 103. So all asset will come at book value, all liability will come at book value, and PC will come as per the information given the question. The equity share capital will come at nominal value, and any PC which is over and above nominal value will be securities premium, and the difference in this journal entry once again will be transferred to capital reserve. Once again to be transferred to capital reserve because this is pooling of interest method. Understood? Very simple. I think question cannot be easier than this. Question cannot be easier than this. चलेगा? Understood? Correct? Now, if the demerger is not under common control, only one difference in the journal entry in the books of demerged company, liability will be debited at book value, asset will be created book value, but difference will now be transferred retained earning. Don't ask me why retained earning. But if suppose they ask one question of demerger which is not under common control, then difference you transfer retained earning not to capital reserve. I mean, right now don't ask me why retained earning, why capital reserve. Here the difference will be transferred to capital reserve. Here the difference will be transferred to retained earning. Got this point? Have you understood this point? Follow. Now in the books of resultant company, transferee company, or we can say accounting acquirer, will apply Ind AS 103 acquisition method. So all asset will come at fair value, all liability will come at fair value. To PC will come as per the information given the question, and any difference will be goodwill or gain on bargain purchase. Goodwill or gain on bargain purchase. Correct. However, there is only one question which we will do, that is business combination, that is demerger under common control. Chalega? Let us do that. There one question of maxi mini. So maxi mini has two division. Maxi mini, the draft information has been given. You can see maxi division, mini division. Information has been given. Correct? Now, just try to understand. They have given balance sheet division wise, and they have given some information is equity share capital and reserve and surplus. If suppose they have given, ignore that information because reserve and surplus and equity share capital cannot be division wise. If they have given such information, it means they want to confuse you. They are trying to confuse you at this moment of time. Correct now? So if they have given any equity share capital and reserve and surplus division wise, just ignore that information. Always take that information entity wise, not division wise. Entity wise, not division wise. Chalega? This is decided to form a new company, Mini Limited, to take over the assets and liability of Mini Division. One new company is formed, Mini Limited, who will take the assets and liability of Mini Division. So this division will be transferred. Accordingly, Mini Limited was incorporated to take over the balance sheet, at balance sheet figure the assets and liability of that division. Mini Limited is to allot 5 crore equity shares of 10 each in the company to the member of Maximi Limited in full satisfaction of their claim, in full settlement of their claim. So Mini Limited will issue shares to the members of Maximi Limited. So it is a question of demerger. The members of Maximi Limited are therefore to become the members of Mini Limited as well as without having to make any further investment. The shareholders of demerged company will also become the shareholders of resultant company. You are required to pass journal entry and prepare the balance sheet. Okay, journal entry batao in the books of Maximi Limited. What will do? Current liability, all liability will be de-recognized at book value. All asset will be de-recognized at book value, and the difference will be transferred to capital reserve. So this is loss on reconstruction, which will be ultimately transferred to capital reserve. At this point, what will be journal entry in the books of Mini Limited? Because we'll apply appendix C to Ind AS 103. However, the question was silent about common control, but ICA has assumed that it is a common control question. Correct now. So if exam also suppose question has been given and the question is silent about common control, so for demerger assume that it is a common control business and do accordingly only. Just try to just have you understood? Yes, sir. In this case, you can see PP has been recorded at book value. Current asset has been recorded at book value. All the liability has been recorded at book value. PC will come as per the information given. The 5 crore, it was 5 crore equity shares issued at par 10, the 50, and the difference will be transferred to capital reserve. And now you can prepare the balance sheet of Maxi Limited, Maxi Mini Limited, and Mini Limited. To Maxi Mini Limited, they have asked before demerger, after demerger you can prepare. Mini Limited you can prepare after demerger. So that is very simple. This journal entry is very, because one journal entry we have done, that you need to incorporate in both the balance sheet. The question cannot be easier than this. But this point demerger also done. You can see all the points to I have done. All the points revision I have done. You can see all the question, all the concept I have done. I have taken the concept of well, a simple question. Correct now. Then we have taken one question of reverse acquisition. Then we have taken one question of demerger. We have taken one question of business combination under common control also. Correct now. Now there are some other questions. Let us do that also. Come to this question, so you can do by your own. Correct now. पढ़ लेते हैं. ABC Limited prepare consolidated financial statement up to 31st March each year. Then what they have given? ABC Limited prepare consolidated financial statement up to 31st March each year. On 1st July 2017, ABC Limited acquires 75% equity shares of JK Limited and gain control of JK Limited. And issued shares of JK Limited is, and the issued share capital of JK Limited is 1 crore 20 lakh equity shares. Out of that, 75% equity shares acquired. Details of PCR as follow. On 1st July 2017, ABC Limited issued shares for every 3 shares acquired in JKL Limited. So the swap ratio is 2/3. On 1st July 2017, the market value of equity shares in ABC Limited was 6.5 and the market value of equity share of JKL Limited is 6 rupees. So देखो JKL Limited is subsidiary company and ABC Limited is parent company. These two fair value, normally student do mistake where which fair value should be taken. On 30th June 2018, ABC Limited will make a cash payment of 71,50,000 to the former shareholders of JK Limited who sold their shares to ABC Limited on 1st July 2017. On 1st July 2017 means on 30th June 2018 means after 1 year. It is a deferred consideration. On 1st July 2017, ABC would pay interest at an annual rate of 10% borrowing. So discount rate is also given. On 30th June 2019 is after 2 years. ABC will make a cash payment of 3 crore to the former shareholders of JK Limited who sold their business to ABC Limited on 1st July 2017. The payment is contingent upon the revenue of ABC Limited growing 15% over the 2-year period from 1st July 2017 to 30th June 2019. This is a contingent consideration. On 1st July, the fair value of contingent consideration is 2 crore 50 lakh. This is relevant for PC. On 31st March, it become 2 crore 20 lakh. Correct now. So what we'll do about the subsequent fair value, that I will explain in a separate point. On 1st July 2017, the carrying value of INA is given how much? 6 crore and the fair value of INA is given 7 crore. 7 crore 6 crore. So of course we want fair value. The rate of deferred tax is 20%. So of course we need to calculate deferred tax also on this temporary difference. So you can see fair value is more than carrying amount. We'll assume tax base is equal to carrying amount. So it is a taxable temporary difference. We will create detail on that. During the 9 month ended 31st March 2018, JK Limited had poorer than expected operating performance. Therefore, on 31st March 2018, it is necessary for ABC Limited to recognize an impairment of goodwill arising on acquisition of JK Limited amounting to be 10% of total computed value. So they are saying that we need to also calculate impairment loss on goodwill, which will be the 10% of total amount of goodwill. Compute the impairment of goodwill and the consolidated financial statement of ABC under both the method permitted by Ind AS 103 for initial computation of NCI. Well, NCI you need to calculate by both the method. It means in this case we need to do two calculation. And NCI is measured at fair value and NCI is measured at Pasina. So NCI is measured at fair value and NCI is measured at Pasina method. Correct? चलो देखते हैं. सबसे पहले we'll calculate PC. We'll calculate PC. तो PC will be what? How many shares are there? 1 crore 20 lakh. They have done calculation all rupees in thousand. So we can also do all calculation in thousand only. So we will take 12,000 then. It will be 12,000 into how much acquired? 75% acquired. What is the swap ratio? 2/3. So this is number of shares to be issued. Multiply by fair value of shares of which company? You only say. It is fair value of shares of acquirer. That is given how much? Fair value of shares of acquirer is how much? Is given 6.5. to multiply by 6.5. So can you say this will be purchase consideration in the form of equity? Then we'll do deferred consideration. So deferred consideration is what? How much they have given deferred consideration? Is 7150. We'll do discounting for 1 year at a rate of 10%. So they have calculated present value of this present value. Then they have given contingent consideration. Contingent consideration they have given 25,000 in 1,000, 25,000. So they have added 25,000. Correct. So again this become total PC. This become total PC. Total PC. Now PC you have calculated. Now we'll find out the NCI based on fair value method and Pasina method. The fair value method. So for fair value method, what we'll do? Now they have not. They have given that how many shares have been acquired? 75%. So how many shares have not been acquired? That is 25%. So 12,000 into 25% means 3,000 shares. So 3,000 shares multiplied by the fair value of shares of acquiree, that is given 6. So this becomes the fair value of NCI. Correct. Fair value of NCI. Now we'll find out the Pasina fair NCI value by using Pasina method. So we need to find out fair value of INA. Fair value of INA also given. That is given how much? Fair value of INA given how much? Is given how much? So INA is given 7 crore. But can you see in this deferred tax need to be adjusted? We need to find out what is the deferred tax. So you can see there is a taxable temporary difference of how much? Of how much? If you say 70,000, this is 60,000. So 10,000 is taxable temporary difference. And we will calculate DTL. DTL at what rate? 20%. So DTL will be 2,000. 2,000. So can you 70,000 is the fair value of INA minus 2,000 will do. So that will be 68,000. 68,000 will be the INA. Correct. Now 68,000 got 25% will take. You can see they have also done 68,000 got 25%. This become the NCI value by using Pasina method. We can find out the total of this. Then from this minus INA is 68,000, 68,000. This will be goodwill. This will be goodwill by both the method. Now from this we'll deduct 10%. So 10% of this will be 2050. 10% of this will be 1950. This is the impairment loss. After that you can find out the carrying amount of goodwill. However, this will be attributable to both party, parent and NCI. This will be attributable only to parent company, not to NCI. This we know. Understood? Correct. This type of question can be asked for 5 marks. Correct. This is simple question. Question number 3 you can do. Question number 4. Come to question 4. This is very important question. Very important question. This is a question of step acquisition, then obtaining control. Correct now. Deepak Limited, an automobile group, acquired 25% of voting ordinary shares of Son Limited, another automobile business, by paying 4,320 crore on 1/4/2019. Deepak Limited account is investment in Son Limited using equity method as prescribed under Ind AS 28. They have acquired only 25%. So this is also significant influence. So what is the cost price? 4,320. Deepak recognized share of net asset changes of Son Limited using equity accounting as follow. share of PL. So can you say as per India's 28, any share of PL will be added to investment? This will be added to investment. Share of exchange difference OCI, this will be added to investment, and share of revaluation reserve will be also added to investment. But can you say it will be transferred to retained earning in consolidated balance sheet, and this will be transferred to what? This will be transferred to FCTR in the consolidated balance sheet, and this will be transferred revaluation surplus in the consolidated balance sheet. Correct? Means what journal entry will do for this investment account debit to retained earning, for this investment account debit to FCTR, for this investment account debit to revaluation reserve. So what is the cost price of investment after, means as per equity method, what is the value? 4320 plus 378 plus 54 plus 27. It become 4779. So now it become 4779. चलेगा 4320 plus 378 plus 54 plus 27, 4779. Now what they are saying, on 1/4/2020, on 1/4/2020, Deepak Limited acquire remaining 75%. So on this date, control is obtained. Yes sir. Of Soul Limited for a cash of rupees 13,500 crore. Fair value of 25% means previously held equity interest is 4860. So the 4860 and 4779 minus karo 4860. Difference coming how much? Is coming how much? 81. 81 is coming. So this become a remeasurement gain which will be transferred to PL if the question is silent. Yes sir. Correct. Understood. And the fair value of INA is given 16,200. How much should the business combination be accounted? How should such business combination should be accounted? That we need. So very simple. First we need to find out goodwill. So goodwill will be what? Batao. PC is how much? PC is 13,500. Fair value of INA how much? Fair value of previously had equity interest is 4860. And fair value of INA how much? 16,200. So minus cut. Goodwill is how much? 13,500 plus 4860 minus 16,200. It is 2160 will be goodwill. Okay. What journal entry will pass? The first journal entry, INA account debit 16,200. Goodwill is 2160. Goodwill is 2160. Correct. Now they have done one compound journal entry. Better I will show you, but a separate journal entry that you will understand in better way. Correct. Now, so the first journal entry will be INA account debit 16,200. Goodwill already we calculated, that is 2160. To investment at carrying amount. Carrying amount was how much? 4779. 4779 previously held equity interest. Correct. And when I say there was a remeasurement gain, that will be transferred to PL. Remeasurement gain transferred to PL 81. And the cash how much paid? Cash how much paid for PC? PC how much paid? That is 13,500. See, this journal entry will tally. Check 16,200 plus 2160 minus 4779 minus 81. It is come tallied. Now, but India's 28 says that whenever equity method discontinued, so OCI component of associate which is recognized in the consolidated balance sheet need to be also de-recognized. You can see there was one revaluation surplus and there was one FCTR, and that will be de-recognized as per respective Indias. So revaluation surplus India 16 said that this will be transferred to retained earning. What journal entry will do? Revaluation surplus account debit to retain earning. One more journal entry will do. One more journal entry. So this is what amount? 27. 27 will be transferred to retain earning. And there is one FCTR which will be reclassified to PL as per India's 21. What journal entry will do? OCI FCTR which will be reclassified to PL, which will be reclassified to PL, and the amount is how much? Amount is how much? 54. Amount is 54. It means they have done one compound journal entry. So what is the total transfer to PL? You can see 81 plus 54. The total 81 plus 54 is 135. The total gain they have shown in the journal entry is 135. Let's see our compound journal entry. 135 they will show. So 135 you can see the gain on previously held interest in the Son Limited recognized PL is 135. Have you understood this point? And retained earning में कितना transfer किया? 27. So they have done one compound journal entry. I have done separate journal entry. Understood this point? This question is super important. Can be asked in exam. Super important. This also done. 5 already I have done. Correct. This you can do by your own. 6 you do by your own. This is easy question. 6 you can do by your own. Now 8. The last question. This is a newly inserted question, can be asked in exam. Can be asked, but very simple. I will just inform you what to do in exam. Now this newly inserted question, last question of business combination. Now what India's 103 says that suppose any entity has acquired interest initially or subsequently in a joint operation, and that joint operation constitute a business, then in the books of the joint operator we need to apply India's 103. Correct. Now so you become a joint operator. Suppose I have acquired 20% interest in what joint operation. Correct. Now and that joint operation constitute a business, then in my books for 20% interest India's 103 will be applicable. Means I will recognize all the assets and liability of that company at fair value, but to the extent of 20%, and goodwill or gain on bargain purchase will be also recognized. This is the concept you have understood. Now let us take the question number 8. So that is partial goodwill. So in the last question of impairment, why second case impairment loss is not clear between parent and NCI? Because that is partial goodwill now. In case of partial goodwill, impairment loss is only attributable to parent company, not to NCI. That too we have done in consolidation also. Why you asking this doubt? Got this? Yes, sir. Now coming to question number 18. Company X is engaged in the business of exploration and development of oil and gas block. So they are producing oil and gas blocks. Company X is currently holding participating interest in below mentioned producing block. They are producing some block. They are producing means what? It is understood from this point it constitutes a business. Correct. The block name is this. Company X has 30% interest. Company Y has 60% interest. Company Z has 10%. Correct. Now in this para they have given for the above block company XYZ has entered into unincorporated joint arrangement. Unincorporated joint arrangement means it is a joint operation. This particular concept is applicable only in case of joint operation, not in case of joint venture. Correct? Yes, sir. Company Y is the operator. Company Y is the operator, and company X and company Z are the joint operator. Correct. Now then they have given some point you read. This is not important for question. Correct. Now however, all the manpower and requisite facility machinery is owned by joint venture. This should not be joint venture, this should be joint operation actually. Okay, now for the past few months due to liquidity issues, company Z defaulted in payment of cash call. Company Z is not paying cash whenever we are calling for the cash. Correct. Therefore, Company Y has issued a notice to Company Z for withdrawal of their participating right on 1/4/2001. Okay. Financial performance of Company Z has not been improved in subsequent months, and therefore Company Z has decided to withdraw participating interest right from Block S and enter into a sale agreement with Company X and Company Y. As per the terms of this agreement, dated 31st/5/2001, Company X will receive 33.33% and Company Y will receive 60.67% of the participating interest right owned by Company Z, means of 10%. So it is a Company X has purchased 33.33% of 10% of participating interest right of that. Similarly, Company Y has purchased 60.67% of the participating interest of Company Z. However, this question we are doing from Company X point of view. They have said Company X is required to pay 1 lakh against this particular purchase. After signing the sale agreement, operator Company Y approached the Government of India for modification, that is removal of Company Z from PSC, and the government has approved this transaction on 30th June. Means agreement was done on 31st May, but approval was received on 30th June, and government approval for the modification is essential given the industry custom. This can say approval was mandatory. Therefore, this business combination will become effective only on 30th June. Therefore, the date of acquisition will be 30th June, not 31st May. So they have asked two questions initially, whether it constitutes a business. So you need to write down the definition of business, and yes, you say yes, it is a business, correct now. And then second, the date of acquisition will be 30th June. That you need to write down theoretically answer. Just read the answer. Then they have given balance sheet of company X and company Z. So this balance sheet is of no use. This balance sheet is of no use because they have given on 31st May, 31st May. This balance sheet which is given on 30th June is relevant. Chalega. Now they have given additional information. Fair value of PP and development capital WIP owned by company Z as per market participant is 5 lakh and 2 lakh. Is only they have given fair value of PP and development capital WIP. Other assets and liability they have not given fair value. So will take carrying amount. However, they have given one more point. Cash and cash equivalent of company Z will not be acquired. So cash and cash equivalent will not be acquired, and the tax rate is given 30%. So if they have given tax rate, it means we need to calculate DTA and DTL also. As per India's 111, it is a joint operation. It is given it is a joint operation. So first find out whether it is a business. Yes. Determine the acquisition date. Already done. Past journal entry. Journal entry is super easy. So they can say all asset. All these asset will come of these 33.33%. But for PP, it will be of fair value. Fair value how much? 5 lakh. 5 lakh. And for this, it will be fair value. That is 2 lakh. Balance all will be which percentage? 33.33%. You can calculate liability also, you can do 33.33%. So that only done. Check karo. Then entry. All asset debited at 33.33% of fair value. Fair value is not given, will take carrying amount. And all liability has been credited at what? Fair value. 33.33% of fair value. Understood? Correct? Very simple. Correct. Understood. Now can I say we need to also calculate DT and DTL? And PC is paid. Cash and cash equivalent will not be taken over. Be careful. Cash and cash equivalent will not be taken over. But cash has been paid. So 1 lakh cash has been paid PC. Now we need to calculate DT. To write down fair value of INA. Fair value of INA will be this. And then carrying amount of INA taken over. The difference will be either taxable or deductible. Of course it will be taxable. So it will be taxable temporary difference on which will apply 20%. 30%. Will apply 30%, and then we'll calculate DTL. So DTL has been calculated and written DTL. Check out DTL also written. And the difference will be goodwill or gain or bargain purchase. So the gain or bargain purchase will come this much. This is the only one journal entry, and then this journal entry incorporated in the balance sheet of X company. Then this will be the final balance sheet. Ho gaya. So this question can be asked. This question can be asked in exam. Understood? The newly incorporated question till now not asked can be asked in exam. Chalega. Understood? Have you understood? Any doubt? Have you understood? Question number 9 and question number 10 also. Question number 9. What they have given? Entity A acquire Entity B. Entity A agree with the former shareholders of Entity B to pay 900 with an additional payment of 500. The subsequent earning of the Entity B reach a specified target in 3 years. So entity A agree with former shareholders of Entity B to pay 900. 900 is PC. With an additional payment of 500. 500 become a contingent consideration. The former shareholders also become employee. So former shareholders is an employee. On the acquisition date, the fair value of net asset is 850 and fair value of additional payment is estimated to be 200. So fair value of additional payment, this is the total amount of payment, but the fair value of contingent consideration is 200. On the acquisition date, the outflow of additional payment is not probable. On acquisition date, outflow is not probable. Therefore, they have not recognized 500. They have recognized that the fair value is given 200. Over the next 3 years, the cumulative earning of Entity B amount to rupees 1050. At year end 3, Entity A pays 500 as the condition was met. Like Entity has paid 500, the contingent consideration payment has been done. State the impact of the financial position and the result of classifying the payment as remuneration and contingent consideration. Right now what they are saying, just try to understand. state the impact on the financial position and the result of classifying the payment as remuneration and contingent consideration. Already I have said, whenever you are paying any contingent payment to employee shareholders, if it can be forfeited, then it is not a part of PC, then it is a remuneration. But if it cannot be forfeited, if the employee terminate, then it is a part of PC. So they are saying additional payment may be classified as remuneration, it may be classified as contingent consideration. Then PC will be what? 900, 200, but here the PC will be 900, 0. Correct? So this become total PC. Understood? This point, and then minus with fair value by NA, then in that case, goodwill, this will be goodwill, and this will be goodwill in this case. Correct? Up to this understood? Now, profit earned during the year was 1050. 1050. Now, if it is remuneration, then this remuneration will be deducted from the profit. You can see remuneration minus kya 500. Understood? But if it was contingent consideration, if it was a contingent consideration for which payment will be done in cash, so it was a financial liability. So it was initially recognized 200, but payment you are doing 500. So whatever extra payment you are doing, that will be what? One type of expense only, loss on settlement of liability. So that will be 300. So in this case, this is the profit and this is the profit. Understood this point? This is newly inserted question, can be asked for 5 marks. Also, it can be asked in MCQs. Good question, I will say. Got this point? Hello, have you understood this? One more question. Mini Limited is a manufacturing entity in the textile industry. Mini Limited decided to reduce the cost of manufacturing by setting up its own power plant for the captive consumption. As per market research report, there was a non-operational power plant in nearby area. Hence, he decided to acquire that power plant, which was having a capacity of 8 megawatt, along with all entire labor force. The power entity is owned by another entity, Max Limited. Mini Limited approached Max Limited for the acquisition of 80 megawatt power plant at the following terms. Mini Limited will seek an independent valuation for determining the fair value of 80 megawatt power plant. Value of other non-current asset acquired and non-current financial liability assumed is itna and itna respectively. Consideration agreed between both the parties 51 million. Both the party agreed to terms and enter into agreement on 1st April 2001 with the immediate effect. Due to unavoidable circumstances, valuation could not be completed by the time Max Limited finalized its financial statement for the year ended 31st March 2001. So it is a question of measurement period. You know measurement period? Max Limited annual financial statement record the fair value of 80 megawatt at 46.90 million with a remaining useful life of 40 years. Max Limited also has a license to operate that power plant unrecorded in the books. So Max Limited has also a license. As on 31st March, it has a fair value of 5 million. They have also had intangible asset which fair value is 5 million. 6 months after acquisition date, Mini Limited received an independent valuation which estimated a fair value of 80 megawatt plant as 54.90. CFO Mini Limited wants you to work upon the following aspect of the transaction. Determine whether transaction should be accounted as an asset acquisition or business combination. So of course it is a business combination. Why? Because just try to understand whenever why it is a business acquisition, because in this case is for that you need to understand what is the definition of business. Correct? Now so they have asked whether it is a business combination. So of course it is a business combination because can I say it will we have acquired some asset, the process, and when process applied on the input that it is capable of generating output. It is capable of generating output. Correct? Now so what the answer is given? Integrated set of activity asset that is capable of being conducted and managed for the purpose of providing goods and services to the customer. So they have given the meaning or definition. In the given scenario, acquisition of power plant along with the labor force. Achha, they have acquired the labor force. Whenever we acquired labor force along with the process, it means it is a business acquisition. So whenever a question says that we are also acquiring skilled labor force, the skilled labor force is why we acquired, because that labor force will apply the process in the input to generate output. Therefore, it is a business acquisition. You can add on because they have acquired labor force. It will be what? A business combination. Then what they have asked? Calculate goodwill or gain on bargain purchase due to above acquisition. But how to calculate goodwill? Then it's purchase consideration. How much is given? Purchase consideration is given. How much? Is given 51 million. 51 million. So write down 51 million. Right. Then we write down fair value of INA. So fair value of power plant. Provisionally we have taken 46.90. Then fair value of non-current asset is given. Fair value of intangible asset is also given, and fair value of non-current liability assume is also given. So this becomes fair value of net asset acquired. This will be goodwill. So provisionally this goodwill will be recognized. This becomes the point number 2. Pass next journal entry in the books of Mini Limited as per Ind AS 103 and prepare balance sheet as on the date of acquisition. Now they have asked to pass journal entry pass कर दो. तो journal entry what? देखो power plant account debit, other asset account debit, intangible asset. You write on intangible asset. There is a fair value of license acquired. What is this? Intangible asset acquired debit, goodwill account debit, to liability, to cash. This will be journal entry, and then prepare the balance sheet. Balance sheet only one journal entry you can easily prepare. You can easily prepare the balance sheet. Only I am here to explain the last point. The last point is what? Last point. Determine whether any adjustment is required in case the valuation received subsequent to the acquisition. If he has passed the next journal entry. With this I just want to explain the measurement period wala concept. What is the date of acquisition? What was the date of acquisition? It is given 1st April 2001. 1st April 2001. Correct? And correct. Actually, this question, one thing is wrong. This should not be 1st April 2001. Correct now. From my point of view, there is some mistake in here, because if the 1st April 2001 is the date of acquisition, then measurement period concept is not applicable. So actually, this was 31st March. 31st March 2001. This is the 31st. So we'll assume the date of acquisition is 31st March 2001. There is some typo mistake in the question, but if the same questions come, then whatever they have done, do it. Understood? And what is the when the new information obtained? 6 months after the acquisition date. 6 months after the acquisition date, and you can see they have given balance sheet as on 31st March 2001 only. I will say there is some typo mistake. There is some typo mistake. Correct now. Now just try to understand what measurement period concept says. This is 31st March 2001. Now if you have done business combination just before 31st March 2001 and due to some reason you have not received the valuation report before approval of financial statement, so you can apply measurement period concept. So measurement period will start from date of acquisition till 1 year. This is the measurement period. In measurement period you can receive information about the facts and circumstances which are existed on the date of acquisition, and for that we can do retrospective accounting. Retrospective accounting. You can see here we have recognized a power plant of how much? Power plant of how much? Is 46.90, but actual value was 54.90. Correct now. So 46.90. Actual value was 54.90. Correct. It means we need to increase power plant by how much? 46.9 minus 54.9. It is 8. So we'll pass one adjustment entry during current financial year in the previous year figure. This will do retrospective restatement in the previous year figure in the current year financial statement. We'll pass one journal entry. We need to increase the power plant by how much? 8. And will decrease goodwill by what? 8. Goodwill by 8. Correct? Understood? In this question there is no NCI, so the NCI will not be affected. However, if NCI is measured by proportionate share in INA method, so if you are increasing this, NCI will be also affected. NCI will be also affected. Means always see in this way. Asset, how much increase has been done? To NCI will be also affected if Pasina method. If Pasina method, not in fair value method. The balance sheet figure will be adjusting goodwill. So here it is 8, it is nil, and this goodwill will become 8. It means, can I say, in the previous year figure, in the current year financial statement, will increase the asset by how much? Power plant by how much? 8, and will decrease the goodwill by 8. Got this point? Correct. And just try to understand, because the date of acquisition was 31st March, the previous year, no depreciation adjustment need to be done. Because can you say no depreciation, because date of acquisition was 31st March only, so no depreciation adjustment. Because if the date of acquisition was here, then can you say we should pass depreciation journal entry from this date to this date also in the previous year figure of current year financial statement. Got this point? However, in this question they have done some wrong, solution में wrong है. I don't know why they have done this. Correct now. देखो what they have done. करो. First journal entry is correct. PP account debit to goodwill, but depreciation they have calculated for 6 months. I will say this is depreciation of current year. This is depreciation of current year. This does not require adjustment on retrospective basis. This become depreciation of current year now. Current year depreciation क्यों adjust कर रहे हैं? This, if it is adjusted, to automatically current year depreciation will be also adjusted. So from my point of view, this is not correct. But exam में question आया तो कर लेना भाई. I don't know. So this question, newly inserted question, can be asked in exam. Can be asked in exam. But from my point of view, this is not correct, because depreciation adjustment will do for previous year. Previous year. The previous year, because the date of acquisition 31st March, so there is no depreciation adjustment. There is no depreciation adjustment. समझे मेरी बात? Are you able to follow me? Understood. With this, we completed all concept and question of business combination. I hope you have understood everything. Have you understood business combination? Now, I have not done India's 28 and India's triple one. Now, if you want that revision, I will say you can go to my previous revision lecture. I have already, in the month of Feb, I have done one revision lecture. In that, I have beautifully explained all the point of India's 28, India's triple one. But I think that much is not required. Only do all the questions by your own. You will be able to understand. But this point, I hope you have understood. All the points done. All the points done. Happy? Can we meet tomorrow? Achha, tomorrow na, I will take financial instrument as well as India's 115. India's 115 I will take tomorrow only with financial instrument. So I will take India's 115 and financial together. Means India's 115 was actually scheduled for 29th, but 29th I will not take. I will take tomorrow only. Correct now? Understood? Have you understood? Tomorrow I will take India's 115 and financial instrument. Got this point? I hope everything is clear. So now allow me to leave. Those who are India's 21, India's 33, you want only expected question to be discussed. I'm totally tired actually. My throat is getting. I will teach more today, so I will not be able to take class tomorrow. Believe me, because now it is totally dried. From the last 4 days, I am taking classes only. Classes only. (13.16). Which chapter? 13.162. What? This is my question bank. Balachandra, you are asking which question bank? Thirteen is agriculture. This is what you are asking about ICS study material. चैप्टर का नाम तो बता दे नलायक. Consolidation. So this is 13 means ICS study material. ICS study. Let us go to ICS study material. Abhi right now I don't have ICS study material. This is my laptop. Let me open my laptop. Wait for 1 minute. I'm just opening. Can you say me which question in my question bank? Balachandra, what is the question actually? Concept is what? What is the concept? As a loss making associate. Oh ho. Hello, India's 28. Say na India's 20 loss making associate and long term interest. I've understood your question. Let me come to that question. Oh, you're asking about this question? You're asking about this question ना? एक बार yes sir बोल दो, then I will start. Yes sir. Can we start? An entity has following three types of interest in an associate. Equity share, 25% of equity share to which the equity method apply. Preference shares, this is investment in preferences. Okay, this is not preference share capital. So entity has following three types of interest. Interest means they have invested in equity shares, they have invested in preference shares, they have given some loan to associate. Correct now. So these are asset. Investment in preference shares. Can I say investment in preference shares will not be accounted as per India's 28? It will be accounted as per India's 109. So that is not outside the scope of India's 109. Correct now. Only investment in equity shares of subsidiaries, associate, joint venture outside the scope of what? India's 109. I hope you're understanding. Non-cumulative preference shares that form part of the net investment in the associate, such preference shares are measured at fair value as per India's 109. This is fair value as per India's 109. Long-term loan, the loan carrying interest at 10% per annum. The interest income is received at the end of each year. The long-term loan is accounted as per amortized cost as per India's 109. The loan also form part of net investment in the associate. Now there is a concept of net investment in associate. What India's 28 says that there are some long-term monetary item for which settlement is not planned. There are some long-term monetary item for which settlement is not planned. There may be some receivable or payable. Receivable to associate, receivable from associate, payable to associate. Correct now. These are receivable which can be a financial asset or financial liability for which settlement is not planned. If the settlement is not planned, so it will form part of the carrying amount of investment in the associate. We call it net investment in associate. This form part of net investment in the associate. Correct now. Understood? Now what they are saying, this long term loan will be accounted as per amortized cost as per Ind AS 109. Okay sir. Now this 10% is the contractual rate of interest. If nothing is given, that will only become EIR. So if this is only EIR, opening balance and closing balance will always remain same. Opening balance and closing balance will always remain same. At the start of year 1, the carrying value of each of the above interest, so you can see equity shares is coming 10 lakh. This is accounted by using Ind AS 28. Preference is coming 5 lakh. This will be accounted at fair value as per Ind AS 109. Long term loan, it will be accounted at 3 lakh at amortized cost as per Ind AS 109. Chalega. The following table summarize the changes in the fair value of preference shares as per Ind AS 109 and impairment loss on long term loan as per Ind AS 109. So of course can I say for financial asset or liability which are within the financial asset which are within the scope of Ind AS 109, their impairment will be also done as per Ind AS 109. An entity share in profit or loss of associate. You can see 1 year, 2 year, 3 year, 4 year, 5 year. They have given changes in the fair value preference shares, impairment loss in long term loan, and the entity share in profit or loss of associate. Throughout year 1 to 5, there has been no objective evidence of impairment in the net investment in the associate, but the investment in associate will not be impaired. The entity does not have any legal or constructive obligation to share the losses of associate beyond its interest in the associate. This para, if you ignore it. I mean, right now I don't want to explain this para. Based on the above, determine the closing balance of each of the above interests at the end of the year. Now, what is the rule? If there is any loss of associate, if there is any loss of the associate, that loss will be allocated to investment in associate. Correct now? To the extent of his carrying amount, his share of loss will be the share of loss will be transferred to investor. Share of loss from associate will be adjusted in investment in associate to the extent of carrying amount. It cannot become negative. It cannot become negative. This is the rule. Correct now. But how to allocate? Now we are able to. Now let us understand with this question only. So they got type of interest. This is investment in equity shares. This is investment in preference shares. And this is long term loan. Opening balance given 10 lakh, 5 lakh, and 3 lakh. Now what Ind AS 28 says that if any investment is a part of net investment in associate, first their accounting should be done as per Ind AS 109. So you can see adjustment as per Ind AS 109 is given. You can see in year 1 this is declined by 50,000 and there is an impairment loss of 50,000. So you can see 50,000 minus 50,000 minus, this will become balance after applying Ind AS 109. It will become 10 lakh, it become 4 lakh 50,000, it become 2 lakh 50,000. So first apply Ind AS 109. Now we'll apply Ind AS 28. Now Ind AS 28, what is the share in loss? So this 16 lakh will be first allocated to equity shareholders, but to the extent of their carrying amount. So we can only allocate 10 lakh. Is every loss, the maximum loss will be borne by equity shareholders, but they can only bear loss to the extent of their carrying amount. Correct now? So we can only allocate 10 lakh. So what is the balance? 6 lakh will be allocated to first preference shareholders and then to the long term loan. Means there is a hierarchy. Whenever there is a repayment in liquidation case, first repayment will be done to loan, then to preference shareholders, then to equity shareholders. Means the maximum loss is borne by equity shareholders. Then what? Preference shareholders. And then what? Then what? Loan holder. So first the loss will be allocated to equity shareholders, then to preference shareholder to the extent of their carrying amount, and then balance loss will be allocated to loan holder. So you can see in this case the carrying amount after applying Ind AS 28 is only 1 lakh in case of loan. First year, have you understood? Year 1, have you understood? Year 1, have you understood? Batao. Then we'll come to year 2. Now coming to year 2. Equity share, preference shares, and long term loan. Now you can see the opening balance is what? Nil, and 1 lakh. Now once again we'll do adjustment as per Ind AS 109. You can see in year 2, once again there is a decrease in the fair value 50,000 and no impairment loss. No impairment loss. You can see this is coming what? In year 2, this is coming minus 50,000. To balance after applying Ind AS 109 become minus 50,000 and 1 lakh. Minus 50,000, 1 lakh. You only say, can the balance can be minus 50,000? No, it means can I say the last year we have allocated how much loss to preference shareholders? 4 lakh 50,000, but out of that 4 lakh 50,000 we reverse 50,000 this year, because the preference shareholders cannot be minus 50,000. It should be nil. It should be nil. Correct now. So after applying Ind AS 109, it should be nil. So out of this 4,50,000, we reverse how much loss? 50,000 loss will be reversed. And you can see this 50,000 loss has been reversed. 50,000 loss has been reversed. Understood? Now what is the share in loss for this year? 2 lakh. This 2 lakh can be allocated only to what? Only to what? Only to loan holder, because their carrying amount is 1 lakh. So this has been allocated only to what? Only to what? Loan holder. So the closing balance becomes 0, 0, 0, 0. Correct? Means out of 2 lakh, we have allocated how much loss? 1 lakh. So how much unrecognized loss? 1 lakh. And out of previous year, how much we have reversed? 50,000. So how much remain unrecognized? So total 1,50,000 remain unrecognized in this year. So what is the loss which remain unrecognized in the second year? So unrecognized loss is how much? 1,50,000. Have you understood this? Year 2, have you understood? If you understood year 2, now year 3, year 4, year 5 will be easy. Only year 2 was thoda sa interesting. Year 2, have you understood? In year 2, what is the unrecognized share of loss? That is 1,50,000. Yes, sir. Now come to year 3. Year 3, you can see opening balance nil, nil, nil. Now we'll do adjustment as per Ind AS 109. You can see there is an increase in the fair value 1 lakh, and there is a reversal of impairment loss. So we'll add 1,50,000. We'll add 1,50,000. Added 1,50,000. The balance after Ind AS 109 come 1,50,000. 1,50,000. Now there is a share of loss nil. Share of loss given in the question is nil, but there was some unrecognized loss of previous year. Now that will be recognized. So what was the unrecognized loss of previous year? That is 1,50,000. That will first allocated to preference holders, and balance will be allocated loan holder. So once again become 0, 0 and 0. Understood? Year 3. I think year 3 you have understood. Now come to year 4. Once again closing opening balance is 0. Opening balance 0. First we'll apply Ind AS 109. So once again you can see how much increase in the fair value 50,000 nil. We will add preference shareholders. How much? 50,000. 50,000 will be added. So what will be the balance after applying Ind AS 109? Nil. 50,000 and nil. Correct. Now what is the share of what is given? Now they have given share of profit is 10 lakh. Share of profit is 10 lakh. So this 10 lakh will be first allocated to loan. First allocated to what? The share of profit first allocated to what? Loan holder, then preference holder, to the extent of loss whatever they have recognized earlier. Correct now. So you can see this share of loss will first allocate to what? First allocate to loan holder to the extent of 3 lakh only, because their original carrying amount was 3 lakh. Check karo, original carrying amount was 3 lakh. Original carrying amount was 3 lakh. So we'll allocate but to the extent of 3 lakh only. In this, how much will allocate? Will allocate 5 lakh. 5 lakh. Understood? Understood? 5 lakh. Now one doubt will come. 5 lakh, one doubt will come. Correct now. Now just try to understand everyone. Initially it was 5 lakh. Correct. Then it was minus 50. Then minus 50. Then plus 1 lakh. Then plus 50,000. This can I say after applying Ind AS 109 it should be 5,50,000. And now we have only 50,000. Means can I say we have allocated loss to the extent of 5 lakh, that will be reversed. If there is a profit, we should allocate that much. So 5 lakh will be added. 5 lakh will be added because the total should be now 5,50,000 as per Ind AS 109. As per Ind AS 109. So 5 lakh, what was the loss allocated earlier, will be now reversed and will be allocated. So share of profit to the extent of 5 lakh will be added to what? Preference holder, and balance profit will be allocated to equity shareholders. Balance profit will be allocated to equity shareholders. Correct. So this become the closing balance in the fourth year. This will become opening balance. Then once again we'll apply Ind AS 109. Correct now. So this will become closing balance after Ind AS 109. Now there is a share of profit. Now entire share of profit will be allocated only to equity shareholders. That is 10 lakh, because this nothing will be allocated. Understood? I hope you have understood now. This is the entire solution. एक बार फिर से देख लेना. Have you understood? Any more question you want me to do? बोलो. Balachandra, have you understood this? Chalo. I think you have understood, Balachandra. Okay, sir. So today this much only. Tomorrow we'll do financial instrument and India's 115. So tomorrow only we'll do India's 115. So India's 115 is rescheduled from 29 to 28. Tomorrow we'll do what? India's 115. Timing I will update. First I will start with financial instrument. Then only after that I will do India's 115. Got this point? The C category chapter, देखो, if just read the content. If you don't have time, just read it. Once you read it, or you can do the concept, because from concept only, from question only you can understand the concept. C category chapter, don't waste much time. Don't waste much time if you do not have that much time. Correct now. For example, India is 41. If you have done all the question, it means you have understood what India is 41. Correct now. And India is 2. If you have done all the question, you have understood. India is 37. If you have done the question, you can write down. Correct now. But read some. For example, there is onerous contract. थोड़ा सा read कर लो. Onerous contract क्या होता है? Then there is reimbursement वाला point that you read. Do ना. There are some concepts which need to be recalled also. Got this point? Hello. Okay. So today this much only. Once can you all repeat with me that I am the best. I am the best. बोलो मेरे साथ. I am the best. I am a chartered accountant and I will definitely become CA in this attempt. एक बार सब बोल दो फटाफट. Everyone. Then we'll wind up. And those who are listening in the recorded classes, they also write down in the comment box. I am the best. I am I am chartered accountant and will definitely become CA in this coming attempt. Everyone write down. I'm waiting for your message. Yes, Barachandra, I am the best. Very good. Excellent. Chalo. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy all my future chartered accountant. Got this point? Bye bye. All the best. Love you all. I'm also totally tired, huh? Oh. Certificate is loading, I know. Certificate is already created. Only you have not received it. Only you have not received it. You are actually chartered accountant. Only this exam is a formality. You have to write exam to get membership number. You have such a knowledge that you can right now go in the market and earn money. But you don't have what? Certificate of practice. चलेगा? Bye bye. All the best.